Good evening, everyone. Welcome to the Audit Committee meeting. I'm Councillor Erdal Dogan. I'm the chair of the meeting. I'm the chair of the Audit Committee. Please note that this meeting is recorded by the Council for the live and subsequent broadcast via the Council's internet site. Officers will introduce themselves when speaking. Apologies for absence.
No apologies. No apologies received, Chair.
Thank you. Naz, urgent business.
None reported, Chair.
Declaration of interest. None. Declaration of interest. No. Thank you. Deputations, petitions, presentation, and questions.
None, Chair.
Thank you, Naz. Minutes from the last meeting, which took place on 22nd of July 2025. Can we agree the minutes if you don't have any kind of suggestions or amendments or comments? Minutes from. I'm going to come to that in a minute. Yep. Is that on the minutes? Okay.
So I'm looking for my notes. That's why there was a reference in the minutes on, I think it was actually on page 2 to I have to go back to it because I haven't got my notes with me. Oh, I know what it was. It was a reference to the fact that there was benchmarking. Benchmarking had been brought to a previous, on procurement, benchmarking had been brought to a previous audit meeting. And I just wanted to ask which benchmarking, which benchmarking, because I know we've been asking for benchmarking on procurement and I don't remember actually having the benchmarking that I wanted.
Can I take that away actually, just to remind myself around which benchmarking? I know that we did, it was the very first report probably about 18 months ago that I bought that looked at benchmarking of contracts and size and different size of organisations in borough and out of borough. That's the only one that I'm aware of. But if I could bring in Barry Phelps, that would be great.
Sorry, yeah, so it was part of the last report that we brought here. I was just going to check the date on that, but essentially it was benchmarking around the expenditure with local SMEs and the number of contracts, that sort of thing that we did locally with local SMEs. That was the benchmarking data that we presented previously.
I was specifically thinking that I remember we asked quite often if we could find out whether you've got actually 3 quotes for different for procurement basically, and I wondered whether that had been included.
Yes, so in the last report we included volumetrics around those that had single quotes and those that had minimum 3 quotes. I can dig out the exact date and then we can refer it back if that's helpful. Okay, thank you.
Thank you, Barry. Okay. If there's no questions about the minutes, can we agree the minutes? And that's been noted. Thank you. So do you have any questions on the action tracker? Yep. Councillor Rossetti.
So I wanted to ask, starting from page 14, page 14 and page 15, there are a couple of action on the housing service, and the status of the action is initiated and it says the information would be reported back to the committee, but it's not clear when. So those were from March, so I was wondering if it's possible to try to give a time frame. And again, March 25, the one below for social care, An update will be provided at the next meeting, which would have been July, and I don't think we received one. And also at the very end, this is very recent, July 2025, is about the staff turnover, because this has also been identified as an area of high risk for the council. The action here is to present a paper to the committee about the staff turnover. So if possible to provide a timescale for that as well, because I think it's quite relevant. Thank you.
Thank you, Councillor Rossetti. Nish, do you want to come in? And I think we also had an update last week on two of the items. Thank you.
Thank you, Chair. So Councillor Rossetti, for all three of those actions, I've written to the appropriate director and asked the directors to send an update to all the committee members and copy myself and Taryn into the response. So my apologies that you haven't had them, but I'll chase it again and make sure all those directors respond to the request from the committee.
Councillor Brennan.
It's a very quick query, and it's only because when I was looking through the papers, so it's really for Taryn Eves. When you said that on page 16 that you would be bringing, yes, it's about the property, and that you'd be bringing an update on property to this meeting. And I just wanted to, I literally couldn't see in the papers which paper was referring to that. And it is actually, says a full update would be provided on these actions at the next committee. So it's on page 16, July 25. So I was just wondering if the full update is included in the papers today or not.
Councillor Brendan, I think there's a little typo there. I think where it says property, it should say procurement. So in relation to the actions related to procurement, that's right. And everything else then makes sense in terms of that content. Yeah.
Councillor Dagidis.
Just I want to pick up a little thing. On page 13, we got on 11th March 2025, a commercial property audit updated. And there is referring to the current debt position, that the debt stands at £5.5 million against an annual rent roll of 10.2 million. Have I read that right? Does that mean that we are only collecting half of what we are due? That's, that's the first thing. I mean, that is, imagine £5 million lost there when we got this crisis. And then it's a more general comment. I welcome, it's quite detailed, this update, the kind of thing, but it hasn't got anywhere dates. It just says initiated. Some, for example, the one I just referred to is already, yeah. For example, that's just the point, and it's not the worst in the thing that I just raised, is 8 months since the committee. Therefore, and all it says is initiated in the end. So just as a general point. But just on this specific thing about the rent collected, from properties, etc.
Yeah, so in terms of the annual rent roll is 10.2 million. The 5.5 will include outstanding, so it's age debt, so it could be debt from previous years. But what might be helpful for the committee is to kind of break that down into a bit more detail. We do know that our debt levels for commercial property are much higher than what we expected. And I'm noting, interesting, going back to the previous point that referred to property, I know that it has been a topic of interest by the committee over recent times. So I think the last update was probably 2 or 3 committees ago, as we say, back in March. there is a lot of work. So commercial property sits under my remit at the moment, kind of it does now. So we're doing a lot of work around kind of lease reviews, rent reviews, etc. So it might be that it might be timely to bring, in the same way that we've done procurement tonight, a much fuller, rounded update, that we bring something back to the committee at a future meeting, just in relation to commercial property, because there's quite a lot of activity that we're doing in that space, including there's reference to a development of a system. But I think it would be helpful just to bring all of that together, plus also in the same way that we've done with procurement tonight, is to give an update on previous internal audit recommendations as well, because I know that there has been quite a number from previous internal audit. So I'm happy to bring that, Minesh, to a future meeting.
Councillor Dagides.
Thank you very much. I take the point about there might be all debt, that it's exaggerating the figure vis-a-vis the current years. They're all okay, but I mean, still sounds very, very heavy. But I just wanted to clarify as well something else. This doesn't include properties we own, let's say the pub down the road, or, on Station Road or something like this, which are left empty for a long time by the council, and others like, and there are quite a few of those around. This is in addition. And then I wonder what the relationship is with the write-offs. Every now and then, these are, if I remember rightly, quite high in our cases. In our case, is there a link on it? Is there a serious problem? Because when we're talking about a budget gap of 20 and 30 million pounds, here we go probably between 5 and 10 million pounds easily on the base budget.
Yeah, thank you. I don't know the specific breakdown of the 5.5, but let's bring that back in terms of empty properties. What I would say, and we saw this both at the end of the year, end of the financial year in March, and also within the Q1 report that we've reported, that we have had to increase our bad debts provision in relation to commercial property. So I think you are correct in your assumption of the high levels of write-off. So let me bring all of that together back in a report to the committee at a later date. Thanks.
Thank you for that. Okay, so I'll move on to the next item, which is item 7, which is the external auditor's annual report, including value for money report. Can I now invite officers to introduce the report? Casey, Josh, and Tim.
Thanks, Chair. Good evening, members and colleagues. My name is Casey Kebu. I'm here to introduce the 2 papers before you, the value for money reports and the auditor's annual reports. The auditor's annual report is a draft report at this stage. The National Audit Office requires the auditors to present this report by no later than 30th November. But as you know, the audit is still ongoing. So the KPMG has come up with this draft report at this stage, just to keep you informed about the progress of the audits and their findings so far in the audit. Hopefully by January, when we come back to the committee, you will have the final report, the final auditor's annual report, and the management responses to the points and recommendations the auditors will raise at that stage. So I will quickly hand over to Tim to introduce both reports. Thank you.
Thanks, Casey. Good evening, everyone. Well, I think Casey's just summed it up very well there. You've got 2 reports on the agenda tonight. The second of which you've seen before. It was the report that we presented to you in the informal briefing we ran a couple of weeks ago. So we weren't intending to present that again to you this evening. However, if you have questions on that, we'll be happy to take them. The first report that you've got is the draft version of the annual auditor's report. Now, we're bringing this to you tonight because it is a regulatory expectation that we do so. So when the National Audit Office and the FRC introduced the backstop legislation a few months ago, they wanted auditors to get back into the good habit of reporting to members every November. Because when the whole backstop legislation period ends, the reporting deadline will move back to the end of November. That's what it's currently scheduled to do at the moment. So getting into the habit of receiving an annual auditor's report in November is just good discipline for the Audit Committee to get into. So what we've done for you this evening, I'll let Josh give you a quick overview in a minute, but you've essentially got the same VFM content that you've got in the risk assessment. So again, we won't refer to that this evening. We'll just take any questions. We've then got a brief overview of where we are with the financial statements audit. In summary, we're making far better progress than we did last year, but we're not going to be complete on that until the January meeting. So when we come back to present to you in January, you will have a finalised version of this annual auditor's report, along with the more detailed ISA 360 report or highlights memorandum, as you might hear it referred to, of all the financial statement findings as well. Okay, so I'll pass over to Josh to give you an overview of where we are with the accounts audit.
Thank you. So the key slides on this report are slides 8 to 12, which start on page 34 of your pack. So here we're summarising the work we've done so far and our findings on the significant risks. So this report is very much focusing just on those 4 significant risks. There is a significant volume of other work going on in the other elements of the financial statements, but we don't cover that here. This is very much on the significant risks. So we've got the 4 identified as per our audit plan that we brought in July. So the first one being management override of controls, which is a presumed risk on every audit. You've then got the valuation of land and buildings. This is driven as a significant risk by the fact that you've got an overall, I think, around £3 billion of assets being valued, and any small change to those underlying assumptions, the BCIS, land value, can have a significant impact. So any small risk here. 34.
30 to 34. Sorry, 30, yeah. The risk starts at page 30.
My pack's 34.
It's the page number on the actual thing.
Oh, sorry, yes. Yeah, page 30, yeah. So yes, 30 to 34. So yeah, the valuation of land and buildings. The third one then is we have the completeness of expenditure, focused specifically on manual accruals, which we think is where management could potentially look to push back expenditure into the following year. And then the valuation of the pension liabilities. Again, in a similar way to the land and buildings, this is around 2 billion in the accounts. Any slight change on the underlying assumptions, CPI, mortality rates, could have a significant impact. So we've identified it as a significant risk. So the first one then on that page 30, management override. So we've summarised some of our findings here. So in line with the prior year, we've identified a control deficiency around the approval and posting of journals. However, we do note this is a common finding elsewhere in the public sector. It's not unique to Haringey, and management did provide a response to this in last year's report. We've assessed the Council's accounting policies and found these to be in line with the CIPFA code. However, again, we do have a recurring control deficiency from last year around the fact that management don't accrue items consistently below £20,000. They have that as a threshold for efficiency purposes. Should note they do, some directorates do accrue, but it's not done consistently. We then report on our ongoing work. So our work over journals is ongoing. We've used our data analytics team to extract all of the council's journals, and we've been successful in doing that. We are now analysing those and will be sampling shortly. Our work over related parties is in progress. That has actually come on a little bit since then. I think we're now satisfied with the values that have been posted in the accounts. I think we will again have another control deficiency here just around the process for recording those related parties and ensuring that the declarations made are consistent. And when we've done our checks against Companies House, we've identified some potential interests that weren't disclosed. However, we've not then found transactions relating to those entries. So it's more an omission in error rather than anything else. Second significant risk then, the valuation of land and buildings. So we've made significant progress on this, certainly a lot more than we made last year, which is really good to see. We've got the control deficiency again around the management review of the underlying assumptions that feed into the evaluation. And in effect, they rely on the work done by Wilkes Head and Eve. However, we say that you should be, according to the standards in the ISA, to have an effective control that meets those standards, you should be reviewing those assumptions and challenging them. In order to do that, you have to have appropriate qualifications and experience. So we effectively say that you almost need a second valuation done there, which in reality doesn't actually achieve value for money. And most entities would say that they are happy with relying on the initial valuation done by the valuer. So in practice, we see this recommendation raised elsewhere as well. We've tested to underlying floor areas without issue, which is good news. We've tested the data that's used by Wilkes Head Neave. We do note that the valuation of land and buildings was completed in 2 tranches due to Wilkes Head Neave's availability. So it means that what's in the draft financial statements that we've done our initial work on, only about half of the land and buildings were valued at that point for 24-25. So there will be material changes to be made to the first draft that we've seen to the final version. However, this is more just due to the timing of Wilkes Head Neave's valuation exercise. We do then raise a control deficiency around this in terms of the timeliness and accuracy of the process, given the delays. And we also found that assets were being valued that the council no longer owns and then are removed from that process before it gets into the accounts. So although we don't think that causes an issue in the accounts, we raise a point on the process, just in the efficiency and making sure you're only valuing what needs to be valued. We then break down our testing on the individual elements of land and buildings. So we start with council dwellings, which is around 1.7 billion and are valued at existing use value. So we've assessed the underlying assumptions that go into that. So the indexation, the beacon valuation, social housing discount, and assessed all these as neutral, which is good. However, we do note that for indexation, which is required because Wilkes Head Neave valued all of the council dwellings last year in full and then have indexed this year. When we've recalculated that indexation, we've used data from the house price index specific to Haringey, to the borough, whereas Wilkes Head Neave used national data. And we think that using the Haringey specific data gives a more accurate picture of the valuation of those buildings. So when we've done that recalculation, we've identified here that we think there is a cautious valuation of council flats to about 18.7 million, and then a cautious valuation of 16.3 million of the council houses, which largely offset. So we've overall concluded balanced. However, we have noted a recommendation for Wilkes Head Neave to use that more accurate data in future, Haringey specific, because in another year it could cause a more material issue. We've noted here as well our testing on the beacon assignments, so where the council assigns all of the council properties to individual beacons that Wilkes Head Neave then value. We have struggled in obtaining underlying evidence to confirm the property type. So we selected a sample of 60, and although we have managed to obtain 55 so far, we have struggled with a lot of that to obtain the underlying tenancy agreements or fire risk assessments, documents to confirm that if it's being valued as a 4-bed house, that you've got confirmation that it's a 4-bed house, for instance, to something outside of the housing software. And I believe for the final 5 items, there's work underway by management to go out and inspect these and provide us with the evidence so that we can conclude on our work. The other land and buildings then, it's 1.2 billion. So the 942 million at direct replacement cost, we've assessed these underlying assumptions as neutral also. So obsolescence, land value, BCIS. So we have done significant work over this. We've found the same. We've now completed our work over the 243 million as well in the last 2 weeks since we drafted this report. And again, assess those underlying assumptions as neutral. The key part of what we've not done yet is mapped everything through to the accounts. We've worked from Wilkes Head Neave's reports because, as I mentioned at the start, the valuation was done in 2 tranches, so the correct figures are not yet input into the financial statements. However, assuming that we can get the beacon testing complete and testing those underlying data elements, we think we will be able to conclude on the land and buildings and the significant risk there. So the next one then on page 33 is the completeness of expenditure significant risk. So again, we have a very similar design and implementation of the control deficiency for manual expenditure accruals, given that these follow the same process as for the manual journals. Again, this is one that we raised in the prior year. We've completed our testing on cutoff, which is testing invoices in the period around year end to make sure that items are recorded in the correct period and not noted any issues. We've completed our sample of unrecorded liability searches. So this is searching for bank payments either side of year end and checking that the items are recorded in the correct period and that there's nothing unrecorded that's gone through the bank and not been recorded in the financial statements. And again, not identified any issues. And we've compared the accruals made to expected accruals for what we'd expect an entity like Haringey, and based on our knowledge of contracts with local suppliers and sort of entity knowledge and what we would expect them to be accruing, and again not identified any issues. So we've done significant work over this risk. And then the final one is the valuation of the LGPS liabilities, which is around 2 billion in the accounts. Again, another control deficiency in relation to that review of the underlying assumptions. However, management are satisfied that they use a third party actuary to produce these assumptions and therefore can rely upon the figures to go into the financial statements. We've completed significant work over this risk as well. We've assessed those underlying assumptions that go into the valuation, compared them to our actuarial benchmarks that KPMG produce centrally, and have deemed these to be balanced. And again, we should be in a position to be able to conclude over this significant risk by the time we bring this finalised report. And that's pretty much all I wanted to cover. I think the main elements here are the key significant risks. I don't know if there's anything else you want to add, Tim.
No, I mean, what we've tried to do there this evening is give you assurance on the progress we've made. So if you wind back to the January meeting when we came to talk to you, we couldn't give you any assurance around property, plant and equipment. What we're saying to you this evening is, pending the last few bits of documentary evidence of the data underpinning that valuation, we should be in a position to do so by January. However, we will come back to you in January with a full and final report on all of these issues and the outstanding work that we're still working through at the moment, and the BFM conclusions that you've seen the risk assessment for a couple of weeks ago. But that said, happy to take any questions on either document this evening.
Thank you, Tim. So I got Councillor Jameson and Councillor Jameson.
When it comes to valuing our when it comes to valuing our council house stock, because council housing is such a problem, like I think in the private sector, you know, it's clear what a 2-bedroom house is, but in the public sector, I mean, I know because I've got residents their house is labelled a 3-bedroom house because the expectation is to use the living room as another bedroom. Yeah, so there's a variable on that, but you know, I don't know if we know how often we do that or whatever. So like the valuing of our council house stock, it might make a minor difference, but.
So, I mean, management might want to sort of describe the process they go through, but I mean, effectively all council housing, the accounting is driven by the SITFA code, and that suggests you should be allocating beacons to these properties. So all of your properties will fit into different property types, or they should, and there could be a varying number of different types of beacon. And that's sort of the data that Josh is referring to. And what we're trying to get to the bottom of at the moment is making sure that each property has been properly allocated to the correct beacon. So if it says it's a 1-bedroom flat, it is a 1-bedroom flat. And the best way for us to do that is to get to the underlying information like tenancy agreements, floor plans, if not physical inspection, which I think is the result that management are now going to give us that last bit of evidence we need. So we do look to check that and then make sure what your independent valuers will then do is for each beacon, look at current market information to say what is the appropriate valuation for, say, a 2-bedroom flat in Haringey, and apply that beacon valuation to the whole population, because that's seen as more proportionate than going around valuing every single 2-bedroom flat separately.
So this is also on council dwellings. I just noticed that you said we've encountered numerous issues with record keeping and it's been challenging to corroborate this information. I was just interested to know whether this is what you would expect to find with councils. Is it unusual for Haringey? Are we less organised with our record keeping, or is it sort of standard to encounter that sort of problems? That was the one thing. Then I was just interested because you were just talking about the beacons. I was thinking there's massive price differences in Haringey between the west and the east. Are you suggesting you use the same prices for both when you?
Just on that point, no. So the council will assign different beacons to different properties, but over your entire portfolio, there's around 430 different beacons. So you will have one bed flats within a specific postcode is generally how they would allocate, and then that would get a valuation, which would mean you, yes, agreed, you would get a wide spread across the borough. So your 430 beacons is across all 16,000 properties.
Just picking up the first point around, do we find this elsewhere? We do find it elsewhere. I mean, at the end of the day, we've gone for a sample of 60 because it is a significant risk, and we've got 55 of them. So it's not like we're saying this is sort of endemic right throughout the population. There's also that element of this probably hasn't been asked for a few years, because this is the first year, hopefully, we're going to give you assurance again on that valuation since March 20, I think it was. So there's a little bit of finance remembering and knowing to work with the right teams within the housing function to get that evidence ready for us first time. And I think no doubt as part of the debrief we go through this exercise, it will be just that, yes, we do need to do that, because we didn't get to this point last year, because of course we didn't get far enough with the valuation itself to make this sort of testing valuable.
Thank you. So, Ras, you're next.
Thanks, Chair. Thanks, Josh. Thanks, Tim. Just a clarification on page 30, last bullet. I mean, I read that bullet as approval of, as it reads, approval of significant, there's a weakness related to approval of significant related party transactions. But I guess in your commentary, you mentioned a weakness regarding recording of declaration of interest. So I just wanted to clarify, which is it? Because those are vastly different, and I'll be more concerned with what's written.
Yeah, so they are different. So that would be a separate one to what we've written there. So that bottom one is around the fact that we would expect in a perfect environment that before you enter into any expenditure transactions with a supplier, that you are checking before you enter into that or make a new contract whether there is a related party there and whether there is any potential conflict. However, in practice, we found that that's not the case, and therefore we've raised the deficiency. But there is a separate deficiency which isn't listed here because we've made more progress in the last 2 weeks since drafting this report around the completeness of some of those declarations.
Yeah, so I guess it's a point to management then. If we have a weakness in how we record declaration of interest, how can we accept a risk about approving related party transaction weaknesses?
So just in terms of process, we did an audit around the declarations of interest, and the procedure is for any officer to declare any interest in any activity where there is a potential conflict that could arise or a perceived conflict arise. So that's the council's overarching framework. So in this instance, what should happen is if an officer is about to enter into a contract where there may be a conflict or a perceived conflict, they should declare it through the council's normal channels for declarations, and that should be fed up to the appropriate officer.
Sorry, Chair. I guess my point is you kind of can't have one without the other. So if you have a problem with recording declarations of interest and you have another process for proving related transactions, you have to reference the declarations of interest to see if it is a related party transaction in essence. But so if you have an issue with the recording of the declarations, you wouldn't know what to approve, if you know what I mean. would be difficult to say that is a genuine related party transaction that should come to the committee if it's not recorded as a declaration of interest, as a declared interest. So for example, if I have an interest and we enter into an arrangement with my firm, if I don't record that interest, you wouldn't know that that transaction needs to go for set approval. So I can't see this as a acceptable risk.
So I've got, so Tim will come and then I'll come back.
Yeah, I was going to say, so you are right, but one improves the quality of the other. So I think you've just got to have two separate recommendations and two management responses to get them both right. So I wouldn't delay trying to implement a process to approve or approve a transaction knowing there is an interest. And in the meantime, you get that register of interest up to date. So you can still have the control in place. It will just operate more effectively as you rectify the declaration of interest point.
That management is saying they accept the risk of the weakness in the approval process, which we can't really have without the other. Unless I'm reading that wrong.
I'll come in briefly, not sure if helpful or not. And I suppose my interpretation of this is you could have, and I can't remember the outcome of the internal audit review on declarations of interest, but you could have all officers declaring interests when appropriate. What this is relating to, I'm looking at colleagues, it's the specific checks that are in place when we enter into a new contract. So that's the difference, isn't it? So you could have a complete up-to-date register of declarations of interest, but what are the checks that are being done when a new contract is entered into to ensure that the register is then updated? I think they are two slightly separate. I'm trying to think of an example. An example, I suppose, for myself is I declare any interest, kind of gifts, hospitality, etc. So that control is in place. But if be a really bad example, isn't it? But I'm then associated with essentially a contract for my service. What this control is saying is that there needs to be the control that ensures that I then declare that interest associated with the contract, if that makes sense. So they're interlinked, but they are slightly separate. This is specifically around when entering into contracts.
Understanding the recording of the declaration of interest part, because I thought there would be an annual process where interests are declared, and then there's a specific process where interest is declared for specific transactions. So which one are we talking about, the specific transaction or the annual?
So your annual declaration point is right. I think what Josh was saying is we've discovered that isn't complete. So I think officers haven't always done that, rather members. However, when you say annual, in reality, this should be an ongoing process all year round. What this one is making sure that when accounts payable are about to pay for something, they have a trigger in their system that sets off a red flag that says there is an interest here. And that is what that narrative comment is, as opposed to what Josh covered in the presentation.
So again, I'm saying we have a weakness in both of those processes.
Yeah.
And I'm comfortable with management accepting the risk of the approval process without fixing the first process. Because if nobody records an interest, you're never going to get a trigger.
But I think you need both controls designed.
Yeah.
And then when you rectify the completeness point, that's when your monitoring control will work more effectively.
The risk. It says to me that they're not planning to fix the approval process.
No, that is that's a call for this committee, but.
And that's what I'm trying to, which risk are we accepting? Because if we do decide to accept the risk, we must be very sure that our declaration process works, whether it's the ongoing or the periodic. We can't have one without the other.
Yeah. If you can take that away and look at that weakness, how that can be a bit more strengthened. Just before I got Councillor Rossetti, is that okay? Yes. Yeah. Thank you so much. I got Councillor Rossetti. Thank you.
Thank you. I'm not sure if it's quite sort of similar because sometimes it's difficult to hear. I think that your question was about interest, question of interest. My question is again about the difficulties in record keeping and that the previous councillor was mentioning. And there is a comment on the same page at the very beginning that says the management have confirmed they continue to accept the residual risk and we are not re-raised this deficiency as a recommendation in the current year. Now, I was thinking a sort of a pattern that is record keeping and data which is missing. So I want to understand if the residual risk because this is about evaluation of land and buildings, I would imagine refers to the fact that something is not evaluated correctly, depending when you use a different evaluator or you use Haringey data on London data. But what about this, the issue with the record keeping? Is that tracked somewhere or has any deficiency been raised on this? Because I think we have also seen in the previous action that there is an issue with housing and providing information to the committee about the different boards and so on. Thanks.
Yeah, so what we've tried to do for you this evening is just bring you a flavour of the work we've done to date, the conclusions we're starting to reach. What you will get in the ISA 260 report that we'll bring back in January are all the detailed performance improvement observations relating to the financial statements or accounts audit. So we are starting to feed those back to management as we go along, but more formally in January, you'll get all of those in writing with management responses to them.
So, Councillor Dagidis, you're next. Can you be concise and quick because we've got quite a lot to go through the agenda? Yeah.
Can I just because by coincidence, I wanted to stress the point that Rie has raised as well. I think that from what I see here, I'm getting really worried. This is one of the most controversial, if you like, areas, the areas in which up and down the country, local authorities get into trouble as well, and all kind of thing. Now, I think that it is serious. Yeah, I think it is a serious concern that we are not clear whether people have declared the interest for particular transactions or in general, and we don't have records of this kind of thing to the level it is. So I'm a bit perplexed when you say that we have accepted the situation and we don't raise any additional recommendations unless we are satisfied that we are there. Now, as far as I can see, there are certain, the people who should really declare are officers, there are cabinet members, probably councillors in particular cases, and probably outside consultants that work with us or advising us in particular issues, etc. And I think I would have been looking at, first of all, an assurance that that is standard has been done, and secondly, that the let's say the staff code or the standing orders of the council have sanctions automatically, disciplinary, is it a disciplinary offense not to declare, all that kind of thing, etc. Have we got these assurances? If we don't, I would ask you, you'd be surprised, but I would ask you to add it as a recommendation to your report. For me, it is a very, very serious issue, and is one of the issues you can bring down a council completely because, something.
Yeah. So just to be absolutely clear, we have raised these. These are recommendations that you will have seen back at the January meeting, and to which management have responded. And to be fair, this is quite consistent across the sector. Particularly around the cases of journals, it's very difficult to get a proportionate cost to a journal system that gives you enforced segregation duties. That is just, if you go to a FTSE 100 company, they will have them, but it's very difficult to get that sort of system functionality for a public sector entity. Ditto with pensions and valuers assumptions. There's a cost benefit balance to you procuring another set of professional advice to validate the set of professional advice that you've already got. Again, when budgets are tight, you've really got to weigh up the benefit of doing that. And obviously, we as your auditors employ our own specialists to do that anyway. However, as Josh mentioned, auditing standards do require us to call that out where we don't see it happening. Now, with this particular point, you know, Ray has made a very good point, but ultimately there is a system functionality element to this to do the design and implementation point we're raising here. Absolutely, you should get confidence that your register of interest is complete. And we do raise that, and we will raise that again in January to say that is important. However, with this design point, if you've got that former control working effectively and you know there's completeness, we would always test the accuracy of that as a retrospective look as part of your related party disclosures in your accounts. What we're talking about here is a more prospective control that your system can help enforce at the point of entering the transaction. But there are other ways of doing that that don't necessarily rely on the system telling you.
Thank you, Tim. So, Councillor Diaguilis, we've got a call up to go for. Is this a short one? Because please keep it short.
I'm just going on all the 5 areas that you identified here in the past. Am I right to say, I've read right this thing, that effectively you're not raising any additional questions on any of those 5 issues? Am I right? Or I may have missed something.
Is this on the value for money part of the report? Not as significantly.
Management override of controls and valuation of lands and buildings, etc.
They remain the 5 significant risks. What you will remember, there was 1 or 2 other areas we classed as other audit risks, things like IFRS 16, for example, which we're still going through at the moment. But you will get a response in January to every one of the risks that we identified in the audit plan earlier in the year.
Time you are advising us that you're not going to put any additional recommendations on this 5 issues.
I can't give you that assurance till the audit's complete.
Thank you.
Yeah.
Thank you, Tim. So I will move on to read the recommendation if there's no further questions. The recommendation for this report is 1, that the committee notes the content of the draft auditor's annual report, the value for money report, and any further or updates given at the meeting by KPMG. 2, that the committee notes that the final auditor's annual report will be submitted in January 2026. Management will at that time provide responses to any issues raised by the external auditors. 3, that the committee notes management responses to the value for money risk assessment issues and recommendations raised by external auditors. Is that agreed?
Probably it's my mistake. I didn't realize, I thought we were going to go more on the bit that says value for money assessment further out. Can I make a general question at this? When I look at the final recommendations in the end, on the report itself, or the general assessments, you find shortcomings in a variety of aspects about holding the data properly, about the certain decision-making process, etc., etc. And then when it comes to governance, you say no concerns. To me, these appear to be governance issues. Is there a contradiction there? Is there something or something I missed?
We need to move on. So, Tim, if you could just quickly respond that.
Sorry, were you referring to data governance there or any specific governance issues?
As you hear, we haven't got time to go to the detail, but just broadly, if I go back to the summary of risk assessments, say, so that does not have adequate procurement processes, there is, lack of oversight in processes, etc., and then when it goes to the last one, it just says about governance and says no concerns there. Okay,
Well, I'll try and summarise that as best I can. So the value, this is the report that we discussed a couple of weeks ago in the briefing session. So the value for money assessment is based on 3 sub-criteria. And what we have to do as auditors is not identify every single issue that we might find. It is very much to say, where could there be a significant weakness in arrangements? So that is quite a high bar, and the areas that we have identified in that report, in our view, constitute potential significant weaknesses. And the definition of a significant weakness would be to incur significant financial loss, to have potential reputational damage. And when we've looked at governance, yes, there are things that could improve, and indeed internal audit colleagues will have highlighted several of those this year, but is there anything individually that could lead to a significant weakness? And we've not found anything as part of our risk assessment. But that's not to say improvements can't still be made.
Thank you, Tim. So, Councillor Daggins, we had a informal private meeting a couple of weeks ago. We had a thorough discussion. So this is a draft report. So we're going to get a full report in January. So if you can move on, that would be really helpful. Thank you. So the next. Can it be quick, please, Councillor Rossetti?
Yeah. So recommendation 3.3 says the committee notes management response to the VFM risk assessment issues, but if I understand correctly, those responses have not been given yet because this is a draft and we don't see the responses. So the responses will be in the report, which will be submitted in January 2026. So we cannot note now responses from management because those will be reported only in January 2026.
That will be the full report, yes.
Yeah, so I don't think that we can have, I mean, to me, it doesn't make much sense to have recommendation 3.3. And I think that on 3.2, it should be stated that management will provide responses to any issue raised by the external auditors, and those responses will be in the final report.
So the reference to that recommendation, so management responses has been provided for a couple of the items. If you see on page 64 and 65 of your pack, which relate to the risks, particularly that were raised and which we have responded to at this stage. So that particular recommendation is referring to those two management responses.
Is that answered your question? Thank you so much. Can I now move on to the next item? Can I now invite the officers to introduce the report, Sam Master? Sorry. So the next item, which is item 8, Treasury Management Q1 Report 2025-2026. Can I now invite officers to introduce the report, Sam Masters? Thank you, Sam.
Thank you, Chair, and good evening, committee. So presenting the Q1 Treasury Management reports, and the committee is asked to note the report. So key areas to note of the report. So section 3 takes us to the local context. So paragraph 3.1, table 1 details our total capital financing requirement as at the end of March 25, which was 1.331 billion, the net position being 1.258 billion. So this is comprised of 981 million of external borrowing with 277 million of internal borrowing or balance sheet resources. So table 2, paragraph 3.3 details our borrowing position. So at the end of Q1, total outstanding external borrowing was 1.05 billion, with 993 million of that being long-term borrowing and 57 being short-term borrowing. This represents a net increase of 69 million over the quarter from the from year end, the preceding financial year. So it's an 87 million increase in long-term borrowing and a 18 million decrease in short-term borrowing. As short-term borrowing has come up for redemption and refinancing, we've been replacing that with longer-term borrowing to manage our interest rate exposure over the short term. Our investment position at the end of the quarter was 98.5 million. So this is up from just 13.6 million at the end of March 25. So that's an increase of 84.9 million. The council has been holding higher than anticipated cash balances during the quarter, and this is principally driven by the lower than anticipated spend on the capital programme. The 98.5 million was split, 30 million being money market funds, and these were 10 million across BlackRock, Invesco and Aviva each. And with the balance of that being with the DMO. Section 4 takes us into borrowing. So after substantial interest rates since 2021, central banks have now begun to reduce their policy rates, albeit slowly. Gilt yields have been volatile, but have reduced slightly, except in relation to longer duration securities. So 30-year plus, we're seeing a slight increase on those yields, which is primarily as a result of an increased uncertainty premium being priced into those longer period gilts. So table 4 then shows us the movement over the last 4 quarters up to June 25 across a basket of different maturities. And we can see there that the 50 years there's a slight increase with the other shorter durations decreasing up to June. So over the quarter, bank of interest rates have fallen from over the last 4 quarters to end of June from 5% to 4.25%, and that represents a 0.25% reduction per quarter. And so the council's borrowing position as at the end of the quarter per table 5 then gives us further granularity around the borrowing. So we had 943 million at an average rate of 3.54%. Borrowed from the PWLB. We had 50 million of LOBOs and at 4.75, and that's not an average rate, that's all of that borrowing was at exactly 4.75%. And then 57 million, which represents our short-term borrowing referenced earlier on at 4.6% from other local authorities. So that gives us a net cost across our borrowing, across all of our 1.05 billion of borrowings of 3.66%. For the first time, we've included a graph in paragraph, a graph showing the council's maturity profile in paragraph 4.11. So this demonstrates the maturity of the borrowing portfolio. So of our LOBO loans, as at the end of June 25, the council held 50 million worth of LOBO loans. So these are lenders' options, borrowers' options. At the beginning of the period, we had 100 million of these LOBO loans. And during the quarter, we were able to negotiate the repayment of 50 million of these LOBO loans, which had a market value of 57 million. So that 7 million representing the premium for the embedded options of these loans. So being able to repay them at par at 50 million represented a really good deal for the local authority. And over the next 3 years, up to the next option date, that has saved us about £250,000 per annum. So this represented a good opportunity for the council to reduce our exposure to these LOBO loans. So section 5 takes us into investments. So table 7 gives us further analysis of the council's investment balances. So over the course of the quarter, the DMO, which is where we principally invest the bulk of our cash balances, those deposit rates range between 4.2 to 4.45%, and the money markets range between 4.25% and 4.54%. Table 9 then gives us credit scoring of our investments and benchmarks that against other local authorities. So we can see that we've had an improvement in our credit rating of our investments from over the quarter from the end of March 25, and a reduction of our bail-in exposure. Bail-in exposure being how much of your deposits at risk should that entity fail. And then section 6 gives us our performance against budget. And you will note that we have spent less to date on our financing of our debt than budgeted, and this again is principally driven by the slower than anticipated spend on the capital program. And then Section 8 and 9 then takes us into our compliance against our prudential indicators, which I'm happy to report we did not breach any over the quarter. And that concludes the presentation. Thank you.
Thank you, Sam. Questions? Res?
Thanks, Sam. Just a clarification question on the 4.13, the saving of 225K. 13. I think you said per annum, whereas the paper says over 3 years. So is that 227 spread over 3 years as a saving, or is it actually per annum?
Sorry, the microphone was off. Yeah, I do believe that is per annum, but I'll need to go back and double check the wording there. Yeah.
And then just lastly on 8.3, we mentioned the finance leases.
Yeah, now,
with the upper limit and lower limit.
Yeah,
you mentioned it because of IFRS. If we apply IFRS, where would we end up on those boundaries?
Sorry, could you repeat that last one?
If we had applied the IFRS 16 standard, what would the boundaries be, and where we would sit in?
So the reason I haven't adjusted it for this report is because I don't know what the implication is as yet. We're still doing some work around that.
Oh, okay.
And once we get that final position, Arlen Close is assisting us, and they've still got a final piece of work to do around this. Once we've come to that final position, I will revise these limits per the report to update. But I would imagine, given how late we're doing Q1, this would be by Q3. I would think that we're able to give those revised limits. But it should be noted that in total we're compliant. But yes, but you're quite right. That subdivision is not properly set, operational and authorised. You're quite right.
So table 5 and table 2. From table 2, I think it was also mentioned there is sort of 69 million pounds of additional borrowing. And I think I've understood those are coming from something that we did with the Public Works and Loan Board. So there was sort of discounted interest rate that we took advantage of. We repaid 50 million pounds in Lobo loan. So this different 69 million pound effectively is the additional borrowing that we have taken out. But for what? What does it mean? Sorry. Okay. So it's okay.
Yeah, the capital investment program. Yeah, that's correct. Yeah.
And the link to this one, there is a comment on 6.2, which says that interest cost for borrowing have been lower than budgeted for, principally due to the capital scheme spent not progressing as anticipating. So I don't know if probably you're not the right person, but I would like to understand why this is not progressing as or if somebody can respond. Yeah.
Sure, yeah. I mean, it's outside the scope of this report, but I mean, and it will be, the Q2 report will be taken to full council. I don't quite know the exact date, but yeah.
Tyron, you want to comment? Thank you.
Yeah, so we agreed our capital programme back at full council in March. We have seen both in the Q1 report and the Q2 report that will go to Cabinet in December that we were probably slightly ambitious in terms of what we could achieve. So when we set the budget and when Sam sets the budget figures within the Treasury Management Strategy Statement, that is based on the capital programme that we think we're going to deliver in year. Both the Q1 and the Q2 will show that we were probably overly ambitious and therefore we won't fully achieve, and we'll get what I refer to as slippage. So it's not to say schemes are not going ahead, it's just that schemes will take slightly longer. So that's really the reference to the capital programme as not anticipated at the pace that we expected, So that is also therefore why we've got an underspend on the borrowing costs, which you're seeing within this report. We are addressing some of that. So we are just, as part of our budget process this year, we are reviewing all of the capital programme to make sure that we set a capital programme each year that we think is both deliverable and also affordable. Because ideally, what we want to get to is a capital programme where we don't have the high levels of slippage, which was being referred to in this report.
Okay, but then what I don't really understand, if we haven't spent the capital that we were planning to, why are we taking on additional borrowing if we haven't spent the previous one? This is 70 million pounds, so it's not like, even if it's
It's
a
not that we're
good
not
interest
spending,
rate,
we're
but
just- Well, it's not that we're not spending, we're just not spending at the anticipated pace that we thought we would spend at. So we are still spending. Because we still have, well, because we still have expenditure to fund. So we are still, yeah, so we borrowed less than we had originally budgeted for. Yeah. Yes, yeah, that's right, yeah. Not that we haven't borrowed anything, or not that there was no spend in the period. It was just lower than anticipated.
Yeah, I haven't got the Q1 report in front of me, but if I remember off the top of my head, we're still forecast to spend on the general fund alone 150 million of spend. So we just put, when we set the programme back in March, we thought that would be a lot higher. We're still forecasting 150. So therefore, Sam, in his responsibility, still does have some borrowing. It's just not the level that we anticipated. That's just for the general fund. And I don't know the figure for the HRM. Looking at Casey, I should do, but I know that we are also spending on the HRA as well. So there will always be some borrowing, just not at the level that we anticipated. What I would say is that we do want to get to a position, though, where we're setting a budget based on the level of borrowing that we are expecting to do, rather than almost setting a too high budget. Thanks.
Is there any further questions on this item? Councillor Dagidis, you had a question? No? Okay, thank you. Okay, so thanks, Sam. So the recommendation for this item is to note the treasury management activity undertaken during the financial year to 30th of June 2025 and the performance achieved, which is attached as Appendix 1 to the report. Number 2, to note all the treasury activities were undertaken in line with the approved treasury management strategy. Agreed? Thank you. Thanks, Sam. So the next item on the agenda is internal audit progress report. Can I now invite officer to introduce the report, Minesh Jani?
Thank you, Chair. Committee members, this is my usual report to you, highlighting the work of internal audit since the last meeting. This report goes up to the work that was completed by internal audit up to the 31st of August 25. I'll talk you through the key parts of the report and start with the performance in terms of the delivery of internal audit plan. So as at that point, 18% of the plan had been delivered. This is slightly behind schedule. I would have expected to have delivered about 25%. But I'm pleased to say that the majority of the audits that were not completed in that period have now been booked. And I've got assurances from Mazars that the work will be completed for the remaining part of the year. The next section is around the follow-up work. In the previous meetings, we've spoken a bit about the level of follow-up. So what I've tried to show in this paper, and that's on page 88, thank you, Chair. Thank you, Councillor Dagidis. On page 88, a table that sets out the level of priority 1 recommendations raised in each of the last 5 financial years and the status of those recommendations. And I'm pleased to report that the majority of the recommendations raised up to the financial year 24 have been implemented, but there are some outstanding, and we know the specific areas to which they relate, and this committee has heard quite a lot about some of those areas already. There were quite a few recommendations raised for the financial year ending in 25. There were 32 recommendations, priority 1. 14 of those have been implemented and 18 are being progressed. We will do another piece of review of those recommendations and bring an updated status. And my expectation would be that that number should come down considerably when we next report on the status of the recommendations. I'll tell you that I'll just pause there and take any questions, because the next section is really to go through the detailed findings of the work that was completed.
Any questions in this part of the report? Okay, yeah, Rennie, you want to come in?
Just a quick one on that full year or financial year 22, those two priority recommendations, are they linked to the procurement system?
That's right, yes. So some of the longer standing recommendations relate to some of the issues that we've spoken about in terms of procurement and property. Yeah.
Sorry, do we have visibility as to when these high priority recommendations, so notwithstanding those that are linked to the system, that will actually be delivered?
Yes, we do. We've heard from colleagues who've attended the meeting of their timeline for implementing some of these recommendations. That is, the recommendation timelines have been extended, just to recognise that, from the original timescales scheduled in the report, and reasons have been explained to this committee in terms of why that's so.
Minesh, there's no further question. You want to continue?
So the final part of the report and goes through in detail on the outcomes of the audit work. So in the last stat cycle, 8 audits were completed. 2 areas were assigned adequate assurance, and they related to cyber governance and risk management of cyber related risks, and the regulatory enforcement service. And the other 6 areas were assigned limited assurance. And I'll just highlight the key areas there. The first was around the review of responsive repairs in housing. So the council's responsive repair team deals with a whole host of routine, emergency or urgent repairs to fix a property defect. And the audit identified a number of areas where the control environment wasn't robust enough to make sure that the responsive repairs were done in a timely and a proper way, consistently. The key areas identified were: 1, that there weren't robust performance indicators in place to allow the service and to alert the service to gaps in the delivery of the repairs. There was a lack of documented and standard process for contract management, and this relates specifically to the use of external contractors. And it was noted that there was a vacancy of a key individual in that process. The contracts manager post had been open for a period. There was a discrepancy between the responsive repairs policy and the system that is used to manage the repairs operations, in that the repairs policy has 4 priorities for identifying repairs that need to be done, from emergency to just routine. But the actual operational system has 8 systems. So there was a bit of a discrepancy as to how the repairs were classified. There was an inconsistency in the noting of post inspections. This is the process by which we assure ourselves that the work's been done and record that as such on our systems. And it's really important that the post inspection properly records the quality and the standard of work that's been done, and the auditors noted some exceptions there. And finally, there was a lack of clarity when people ring up and report repairs that need to be done. There was a lack of consistency in clearly noting what it is that needs to be done, and you can see that can cause problems further along the chain, because if you're not quite sure what needs to be done, then that can lead to officers having to attend possibly more than once to be able to complete their jobs. I'll just pause there and take any questions before I move to the next audit area.
Is there any questions? Res?
Thanks, Chair. Thanks, Manish. Just a quick one. The priority one recommendation is due for implementation in October. Do we have any idea if that's been done or not?
Not yet, I'm afraid. No, I need to do a follow-up of that.
Sure.
Thank you.
I guess just overall, being on a housing association, maybe this is also a little issue, and there's a lot of focus being on getting this right. A lot of the stuff that's raised here is one-on-one issues, and I would think that there's quite a robust plan to get this fixed. That I'm hoping. And then secondly, because of the situation we're in around savings, do we have an idea for that point around monitoring of stock usage, what the current write-off is for this area's stock, if there are any, if it's material or not? Because if we're saying that there's lack of process in monitoring, I would assume that the stock write-off in relation to the stock balance is quite significant.
Yeah, let me answer the first question. So there is an improvement plan in place for housing services, which is trying to improve a whole host of areas where issues have been identified in particularly around our compliance with the standards, the 6 standards, but it includes other areas as well, so like repairs. So there is an improvement plan that's shared by I think it's the Director of Housing. The second element, which is around the stock write-off, I'm not entirely sure.
Sorry, so the item relates to controls around monitoring of stock usage and how we do stock counts, etc. So if we say there's weakness in controls, I would imagine, or I'm assuming, that there's a stock write-off element that sits in that. And what is that stock write-off in relation to the stock balance?
I'll tell you what, do you mind if I bring that information
Sure.
back to you? Because I don't actually have that to hand.
I guess just a closing statement on this and some of the other issues that's raised in the rest of this report. I'm not getting the good fuzzy feeling that some of the services are on board with where we are in the position and doing everything we can to make sure that either things that impact our reputation are nipped in the bud, and things that impact money going out the door are also quite focused on. And from some of the stuff that I've seen throughout this report, I'm not getting that feeling.
That's been noted, right? Thank you.
Yeah, unfortunately, this is not a surprise for us councillors, I would imagine, because it's the bread and butter of our casework. So I just want to confirm, because this is touching really close our residents, how we are going to close the loop that those recommendations are going to be implemented, because December 26 is quite far away. And also there is a housing improvement board. So I wonder if this report is going to be shared with them and circulated to them, because they are sort of tracking exactly the same issues.
I do track all of the housing recommendations as part of things. So we've got live trackers that management update and I periodically go in. So I've got management reassurances in terms of how they're progressing the actions within these reports. But our actual formal follow-up will be timed when there's a few things to go back and look at. So the last update that I had on the priority 1 recommendation was that they'd made progress, partly implemented a number of developments. They were still on track for the October 2025 deadline. However, I haven't formally gone in and independently verified that yet, but we have sort of got live sort of tracking of some of these issues in the housing space.
And the second suggestion is a really good one. I'll make sure that I report that back to the director to make sure that it's covered as part of the improvement plan. Yep.
Councillor Worrell.
Thank you. Yeah, it was just a similar point really, around kind of transparency and like I sit on the Internal Housing Improvement Board and I also used to chair the scrutiny panel, and I feel like the level of detail that we're getting here about what is actually causing the issues that we see over and over again in our casework is a lot more detailed than what we tend to get, and then the narratives that we tend to get about why issues arise in those spaces. And I feel like it would be really valuable for this kind of detail to be more reflective in those spaces. Thanks.
Thank you, Councillor Worrell. That's a useful feedback, and I'll take that into account when I think about the audit plan for next year as well, in terms of what that improvement plan looks like.
Councillor Dagidis.
Quick one. First of all, I'm very pleased to see dates at the end, as we have asked before on these two reports. And according to what is here, it looks like practically every recommendation should have been implemented by now. I can't see any. No, I appreciate, your questions, etc. Is it possible to send us a list and say, have they all been implemented by the dates that you said there by September? I mean, most of them, etc. Just an update. That's all. Thank you.
Yep. So that's noted, and that's going to be shared with the committee members. Ready?
It was just to pick up on the timelines, and I guess sort of in reference to the table that we saw previously, where priority recommendations haven't been implemented, are 2 years outstanding. It's just what assurance can the services afford us as the committee any confidence around their ability to implement the recommendations by the deadlines that have been stipulated, because we don't really have a particularly solid track record here. So it's just to understand what mechanism is there to track progress, so that we don't come to this time next year and be told, actually, we've just rolled over and extended the deadlines, because that seems to be thematic. And I guess just some of these things, they seem pretty fundamental. And I sort of wonder and / worry to what extent, like, why do we need to wait as long? Because I sort of feel like that some of the issues or root causes will only be compounded between now and the point at which these recommendations need to be implemented. So just to sort of, the cynic in me doesn't sort of feels that, I guess sort of building on the point that whereas less warm and fuzzy, or just some degree of confidence.
Thank you. That's a very good point. So the way the committee has been dealing with this is that to gain the confidence and to be satisfied that action is being taken around some of these areas, we've asked the appropriate officers to attend these meetings and to give an update and to give an account of why it is recommendations raised by audit still remain outstanding for 2 years. And we've had that before, and I think that's a really good cycle, and we will want to continue with that. So in any area in future where the committee feels progress is slow or is not at the appropriate level, we can invite the officers to speak to and give an update of the account in terms of where they are. And I think that links to your second point, which is that why would we need to wait for the timeline that we have? Actually, if we are worried about the fact that it's taking too long, then the committee can again invite people who are essentially the management role and making sure that their systems are operating in the way they should, to speak to the committee and to give the committee some confidence that things are being done to improve the control environment and therefore the risk management processes that underlie the systems.
You want to continue, Manish?
Thank you, Chair. So the second area, just to speak to the second area, we carried out an audit around the arrangements for managing contracts within housing, and that was assigned a limited assurance. This was not unexpected, because there had been some concerns raised with us in the internal audits team that the systems for managing contracts were weak, and we were aware of that. And the purpose of this audit was to carry out a review to help the service set in motion the sorts of systems and processes that should be established. But for completeness, I'd want to include some analysis or some detail of what was found. In essence, what the auditors noted was that the service did not have a complete handle on all the contracts that they were responsible for, and therefore couldn't necessarily carry out the contract management to the standard that was required. They had, to be fair, the service had thought about delineating all the different contracts that they were aware of by prioritizing those that were more important, and therefore doing contract management in those areas more so than the other areas. But there were some inconsistencies. The process just wasn't as robust as it really should have been. And it was also noted that where contract management was being carried out, risks, issues, actions arising from discussions with contractors were not always recorded as thoroughly as they should be, and actioned as they should have been. So there were some gaps in that process too. Again, I'll just pause and take any questions.
Any questions on that? No. Okay, so Councillor Jameson, then Councillor Rossetti.
Like basically, why aren't they monitoring these contracts? And does the service have enough staff? Are they do they have the right skill set? You know, how come we're not monitoring those contracts? Because they must be expensive.
So I think the root cause for why they were not as effective goes back to 2 points. First of all, is the systems. So what the service needs is a proper understanding of the contracts they already have by recording them in a consistent way, and then making sure that there is a proper arrangement for managing those contracts. And the second point would be around people just being very clear about what contract management actually entails, and being thorough in making sure that those activities were carried out. Now, there is a training part to that. I think people could be trained up to become more efficient and better at contract management. But actually, there is a more fundamental issue, which is that contract management should still be carried out. And so that I think the 2 points I would raise is systems and people's ability to make sure that they do contract management properly.
Councillor Rossetti. So Minesh, okay, thanks. So in terms of the system, so at the moment, what kind of approach is the service using? Is that Excel files, or is it Excel's way of recording data? And is that where you find out where that issue lies? They're not being updated, they haven't been monitored, and so forth.
Yes, it's a mixture of things. So we have a procurement system that the organization uses, but the audit trail around that are not as robust as should be. So the service considers or has a record of what it thinks it's let at a time frame, but that isn't consistent with what's actually on HCPS. So that can lead to a discrepancy. As one thing. And the second thing is, in terms of other records, yes, there are other tools that the service uses to manage the contracts, but that's not necessarily visible on a council's procurement system. So it's it's held in other forms.
Thank you. We'll continue with the next.
So the third area was a monitoring and control of key income streams. The purpose of this audit was to try to get a better appreciation of how it is that we as an organization have a very clear picture and a very clear view of all our income streams, and the position in relation to the collection of income from those streams. So the auditors selected the key streams that generate most revenue for us and identified a number of key risks. What the auditors found was that, broadly speaking, the income streams themselves have a process for monitoring, reporting what the purpose of those streams was, but actually there isn't necessarily a collective understanding or a strategic oversight to make sure that we maximize the income from all the individual streams. Number one. And number two, there were some deficiencies in some of those income streams themselves. So, for example, council tax is generally a very good system for collecting monies. They had a better handle on what was due and when to collect the money. But on the general income collection cycle, that was less efficient and wasn't collecting as much as it ought to. So essentially 2 points. Some streams were better than others in terms of collection, but the key thing is actually overarching all of that. This needs to be reported to the right people so that appropriate action can be taken at the right time to maximize our income collection.
Any questions on this? Councillor?
So, Councillor Rossetti, sorry if I've misled you here. So, as an organisation, we are a complex being, and we have many different ways of collecting income. Each of those income sources has a very good system. So the income is recognised, the billing happens, money comes in, and it's banked. So that all happens. But there are some systems within that are better than others. So council tax, for example, as I referred, is actually very good at making sure that the income that's due to us is billed out in time and is collected in a timely way. And we collect quite a lot of it. There are other systems, so the general income collection system, where actually is not as efficient. So there is no question that income that is due to us is not billed for. No, we bill for it, but actually sometimes on some systems we are very good at chasing and getting the money back. Others it's not as vigorous. So that's the first point. And the second point is more about the strategic oversight. And what that's really trying to do is, if we can be cited as senior managers on where the systems for collection are not as robust, then we're able to act and do something more beyond what we are doing now. And that's so important in current climate, where we can actually try to maximize our income collection.
We see the financial statements. There is always a huge amount of money on money that is owed to the council, but is not collected. So that's why I wanted to double check. Thank you.
Thank you, Councillor Rossetti. Nish, do you want to move on?
I'll speak to one
question.
Sorry, just one point, Minesh. If you could explain the become proactive and chasing debt and address poor debt management culture. Is that pervasive across the income services, or is it particular to a certain service? That is on page 91.
Yeah,
literally the last bullet on that page.
Thank you, Riaz. That was specific to the general income collection system. I think we can be a lot more proactive there.
Can I just suggest that for the paper's sake that we make it quite clear that that it's not, because I read that and I thought it was pervasive.
Yeah, no, thanks for the clarification. That's all.
Thank you. Minesh, you want to move on to the next?
Okay, so the next area that was audited was the use of data and business intelligence. The purpose of this audit was to see how the organization is using data to help inform essentially decision making. How do we make sure that we are using all the data at our disposal, collecting it, using other tools to give us useful insight and understanding of what's happening in our authority. What the audit identified was that actually, look, there's a good team of people in place. The team understands its role. There is a strategic aim that's been set out. The area that the auditors raised concerns over was a clear understanding in the organization of how valuable this team could be in helping generate the right level of information to be used across the organization. Some services just weren't aware that this option was available to them. And then setting out in a very clear way what those indicators or what that sort of management information could be for the organization as a whole, and how frequently it should be reported to senior colleagues to make a difference in the organization. So for those reasons, the audit was assigned limited assurance.
Is there any questions on this? Res?
Sorry, Chair. Just an observation. I mean, I've raised, I've built data analytics teams being not coming from an analytics background, but what I found is that the business doesn't usually buy into initiative like this if the team doesn't demonstrate that they have an understanding of the risk, the opportunities that their insights could provide. And I guess my question is, are we happy that those 16 staff members, as talented as they are in the data analytics space, are they clued up to the complexities of the council, where our challenges sit, how the data that we own can overcome some of those challenges or provide opportunities?
You know what? So I think, look, I think that is a very good observation, and I think to address that, the team used to sit in another part of the organization, but it's actually been brought into digital and change team, essentially to leverage the benefits of that service to the organization. So I think it's a fair call to say that actually it probably wasn't in the right place to start with, but hopefully with the setting in the new team, it should be so.
Yeah, so just two things to add. I think probably as an organisation, we're not making enough use of data, and I'm going to say data and insight actually, because you can have the best data, can't you? But if you're not actually using the insight that the data tells you, so we've got lots and lots of data, and what we're trying to do at the moment is, some call it like a data lake. We're trying to look at everything that we do have and really encourage kind of the use of that data and insight to inform decision making. The second is, and kind of Minesh has picked up on it slightly. I mean, it's a very small team, but I would say a very powerful and influential team. That they're holding an awful lot of data and insight. And one of the things that we want to do is help to promote, probably isn't the right word, but almost demonstrate across the organisation the role of that team, the importance of that team, the data, because what we really want to avoid is lots of number crunching, but not necessarily the outcomes that we want at the other side. But so we've got some work to do, I think, to be fair in both areas. I think sitting within digital actually will support with that as well. But yeah, so one of my roles will be to make sure that team is promoted across the organisation and the importance of the team. Thanks.
Yeah, sure, of course you can.
Yeah, so what I found that works, especially when you have a small analytics team looking after a big organization, is choose one problem area, have them focus on that as a proof of concept, because then if it works, you have that area be their marketing around the organization. So it's just something to think about.
Thanks. Any other question?
Just a quick one. Are they being leveraged in the absence of this procurement system?
Not that team specifically. So I'm kind of looking at Barry really. So no, that's fine. And maybe we'll cover it under the next item. So I'm almost reluctant for everything to come back to the procurement system, but the role of that team is more about what I would call the service data analytics to inform the decision making. There are alternative arrangements that we've got in place, more manual arrangements got in place with the absence of a procurement system, but there's not a direct link with the work of that team. But maybe we can come back to that at the end under the procurement update.
You want to continue? Yeah.
Thank you, Chair. Look, if I can just take any questions on the other two areas, and with your permission, invite Mark, who works as a senior manager, director, associate director within Mazars, because you'll see that there is an appendix attached to my paper, and Mark, from his role in Mazars, could offer some insights for the committee as well.
So is there any further questions on virtual schools, which was received as limited assurance, and the management of Green Haringey was also received as limited assurance? Councillor Worrell?
Thank you. Yeah, it was just clarification on the green spaces maintenance and the sort of lack of record keeping. Is that just for kind of like responsive maintenance and upgrades, or is that there's kind of no record keeping or no like timetable at all of kind of regular maintenance and planned works? Thanks.
Thank you, Councillor Worrell. So it relates more to the record keeping per se. So this is not to say that there is no record keeping whatsoever, but actually the service could be much improved if it kept a record of responsive as well as planned schedules. They have an overarching strategy which sets out what they intend to do collectively in all our green spaces, and as the report attests, there's a lot that they do. But actually, in terms of trying to make sure that for individual sites and individual areas, that they have that record of what it is they want to do and how they've gone about actually doing that, that'd be more helpful.
So, any other question?
Yeah, just a quick observation. I mean, to invest time to creating a strategy for 15 years, I don't know if any organisation's time horizon is 15 years versus not having a record of maintenance activities for the kind of short to medium term. Just sort of feels like we're investing our time and resource in the right things. And it's, I'm looking at you, Manesh, but like recognise that you are merely the messenger here. And it's just to acknowledge that whilst I'm sure I haven't had a look at the strategy that they've outlaid, but I just do find that slightly befuddling.
You're quite right, and I suspect the strategy will be refreshed before the 15 years are up. I'm pretty sure. It's actually not unusual to set sort of strategies of that length of time, just because it gives the service a little bit of a sort of a visibility of what they're trying to achieve. But when you've got the sort of the diverse green spaces that we have, I think it's a useful thing to make sure that strategy then sinks into the ground of, pardon my pun, into the ground of what it is that we wish to do for each of the different sites.
Councillor Dagidis.
Quickly, just a couple of comments more than anything else. So management of Green Haringey. First of all, can I say, reading that page, I've learned more straight away, quickly about what the size of the issues are and how many parks and everything like this we got. It's very, very well written in that sense. But similarly, there's something that jumps out of this, as well as of some of the previous ones. And it might sound arrogant of me, but why our managers do need audit, special audits, etc., to tell them that they've got to keep records, they've got to do, monitor the contracts, do this, that, and the other, because that's what's coming all the time in. I mean, what on earth? I mean, what is the job if it isn't that? I just, is there some general feel that you bring from all these things around there? We probably do need something at that level rather than just looking at every detail every time and every lady. Oh, they didn't do that. They haven't got that. We missed that.
Thank you, Councillor Dakides. Yeah, look, you may recall that when I came to the July meeting with my annual report, one of the areas I identified from all the work that I did last year was that actually record keeping could be improved in the organisation. And I don't think it's because the organisation doesn't recognise that's an important thing to do. But I think that people sort of are distracted by the day job that they have. So in this particular context, I think staff are probably thinking, right, I want to go and do what I need to do in the park or wherever else, and not capturing that level of detail in our systems, which is not an excuse. I mean, I wouldn't make an excuse for management, but it's perhaps an explanation as to why that happens. But it's not something that I think is the right thing. I think we should have proper as public servants, particularly in the public sector. One of the things that we would expect to do really, really well is record everything, and I think we should stick to that. And that's where I'll push it.
I think, well, I suppose you answered quite, but it's something about the culture of the organisation. I think whether it's not a subject for probably an audit, that one, but it is. Underlying a lot of those things is the culture, and of course sometimes the wider governance systems that they cause a lot of those problems. But why can't we identify these problems, appoint the right people who have the right thing, or train them in the right way, so that we don't have to go constantly chasing them? But it's a culture issue.
Yeah. Can I just add in terms of, so all this monitoring adding into the system is a big job in itself. So, as somebody just working in the parks and just comes and just trying to add all that kind of data, input all that data, it is a big job in itself, and therefore it's being under-resourced as a result of this report. So I think that if you're under-resourced, that is one of the cause of this issue. But you can feel free to.
And just, I suppose, just to add to that, if we can find ways of making that data collection and data maintenance easier for people, I think that would improve the quality as well. But the data capture.
Is that where the data insights team can help? I guess I'm just trying to think, like, you've got this like team of 16 people, there are clearly deficiencies, and it's like trying to bring the work to them rather than selling their kind of profile and what they can do. It's like there are clearly some obvious areas, and look, it's not to solve now, but just more kind of trying to think.
Welcome, Mark.
Thank you for having me. It's nice to meet everyone. It's quite reassuring because everything I was going to say, I think, has pretty much been said already by somebody in the committee. So apologies if it's repeated. But I just wanted to take the opportunity to run through one of the additional slides that we've really added to the appendix for this committee, and that's around sort of like the early warning and common themes that we're seeing from the work we're doing. So it's important to note that some of the early warnings in there are from draft reports, so they are subject to change. They haven't been through management yet. There are likely to be comments on this, but we wanted to draw it to the committee's attention earlier rather than later. So if there are any particular comments from the committee, they can be taken away. But as we've already spoken about in this committee, the kind of key common theme that keeps coming up is around contract management and that sort of oversight and awareness of the contracts we hold, who's responsible for them, and how we're managing the contractors. That continues to come up regardless of where we audit in the council. Really, it's not isolated to one area really. And then kind of the other key theme was around data, which we seem to have talked about a lot. And from the work we're doing, it's mainly seeing that sort of maturity or availability of data to be able to do kind of meaningful like data analytics work with it to find exceptions or anomalies that we can then delve a bit deeper into as part of sort of sample testing. But that also obviously limits the council's ability to use that data as well, not just for audit purposes, but to make decisions and improve service delivery. The use of data as well is, I don't know, I'd probably describe it as a fairly immature stage in terms of how it's embedded throughout the organisation, throughout kind of like that decision making tree and how that all works. And there's different maturity levels in different areas. So to your point earlier around, is there one area that you could go into and target and use them as sort of like the marketing tool? There probably are areas in the council that are more mature that would be more viable for that, I would say. And one of the key areas linked to data was around like measuring performance in services. A lot of the actions that come up, and a few have been mentioned from the reports that came today, is around that. How do we set KPIs and make sure that our services are delivering what we're expecting them to deliver, and how do we manage them and really sort of challenge the data that we're getting back from them. And then sort of the final area I just wanted to touch on was around sort of statutory compliance. And we know there's sort of issues in housing around statutory compliance, and there's been a lot of work that's been done there. But there's also a couple of pockets elsewhere. So the regulatory services audit, there was a few bits in there around like the timeliness of inspections, and within the virtual school audit, we picked up a few things around the PEPs that should be completed, and again the timeliness around that. And I think ultimately the root cause to that comes back to capacity and kind of what needs to be done. But just also to reiterate a point Minesh made earlier, right at the very start, about the amount of the plan that's been delivered. And I just wanted to, from our side, in terms of we deliver the work, to just provide some reassurance that the work is all assigned across the year. Yes, it's probably not been as much delivered to date as we would have hoped for a variety of reasons, but everything's got agreed dates in. We're confident all the work will be delivered by the end of the year. Certainly all the field work and the majority of the draft reports will be complete then as well. But...
Thank you, Mark. Is there any questions to Mark? As I said,
I'm not sure actually if it's for you or for Minish, but it is in the report. So the first question is on page 99. One of the report in the plan is the managing of the housing benefit overpayments, which to me is sort of the other side of the lack of income collection. So there was start date May 25. So I was wondering if there is a date when it would probably be finalized, because I saw that the other one, the one just above, was finalized in July. So I wonder if there is a date for that. And the second question is on one of the report which has adequate assurance, the one on regulatory and enforcement. I think is mentioned there is about 5 services, and I wanted to double check if planning enforcement is in those. No, okay. Because I receive a lot of complaints about that, so I was surprised to see adequate assurance. Okay, thank you.
On that housing benefit one, I can answer that quickly, Minesh. It's still with management waiting comments. Sorry? In the housing benefits, the housing benefit overpayment one that's still outstanding. We're still awaiting management responses on that. So that they've been chased and we're working with management to get those in as quickly as possible. Yeah, ideally we would have had responses by now. Yeah, yeah.
Yep. Thank you. Is there, are you done work or you done? Okay. Thank you so much. So Minesh, is there any further on this?
No, thank you, Chair. I think that completes the item.
Completes the item. Okay. So the recommendation for this item is the Audit Committee review and approve the draft 2024-2025 AGS attached at the Appendix A, that the Audit Committee notes the approval of timescale and processes for the draft 2024-2025 AGS. Are we agreed? Yep, thank you. So the next item is item 10, Anti-Fraud, Bribery and Corruption Report. That's Vanessa.
Starts at 118. This is a Q1 and 2 report, so it covers the activity for the first 6 years of the year, so 6 months of the year. Strategy was last refreshed 2024, but we annually consider the risk assessment with regards to fraud, and the areas of risk have not changed significantly for 25-26. However, current risk levels are increasing, and as a result, reactive referrals are increasing. In section 13 of the report, provided some narrative relating to the risk areas, which also tries to explain a bit about how resources are deployed. Section 14 starts on the bottom of 121, and there's a list of some of the proactive work we've been trying to progress in the year. Section 15 of the report includes my usual information about caseloads and outcomes, and information into our key areas of work. Outcomes are on track for this financial year, and we're looking likely to exceed our targets in terms of property recoveries. I think that's really just some of the blockers in the processes for the teams we work on seem to have sort of finally eroded away, and we're really seeing a much more timely churn of some of the cases through to recovery. So it's really, really positive, which means a lot of our older cases are also starting to close. So 2025 is a National Fraud Initiative year, so the team's done a lot of work with services this year, not only, I suppose, the tail end of 2024 to make sure the data goes off in the right formats, but to look at the matches that we get back and sift out the good fraud matches, help services to identify where it's maybe data issues that we're identifying in the reports that come back from the NFI. There are some really good cases coming out of the work. I think we'll have some good outcomes from those. I think the NFIs, certainly in my time in Haringey, each time I see it, I think it becomes more useful to us and to the services. I think there is an element of the NFI developing and improving what they're focusing on and how the matching works. But I think there is also an element of better data and data cleansing our side. I know we've talked a lot about data tonight, but we are certainly seeing some improvements in some areas. We've had a really high number though towards the end of my report. They paid 127. We've had a really high number of employee-related cases, in particular dual roles, and a number of whistleblowers as well over the summer. So we're working really closely with HR and management in terms of taking forward investigations. There are some large, reasonably complex cases mixed in with the referrals, but I am confident in terms of sort of our efficiency of working on them, that any of them that aren't going into the prosecution stage will be closed at year end. I think that's an achievable objective. Thank you, Chair.
Thank you, Vanessa. Questions? Councillor Worrell?
Thank you. Yeah, I was just interested in the narrative around internal fraud at 13.5. So there's, yeah, as you say, mention of the dual kind of income with agency workers as one source of that. Do you have any sense of like other trends that are driving some of those internal cases and the whistleblowing instances? Thanks.
I think, I mean, the dual worker cases is definitely not unique to Haringey. It's something, I mean, we've got a strong fraud network across, you know, London locally, and everybody's facing the same challenges with that. It's not a surprise to us. When COVID came along and the organisations went to hybrid working, the risk was very obvious that it would be much harder to see, and you know, outcome management would need to be more prevalent. The challenges as well, I think we're seeing the, you know, the cost of living crisis and the motives in this. I think for some individuals, genuinely there's a need, not just a greed going on. So yeah, I think I put in my report somewhere when I talk about risk that there's sort of factors that influence fraud, and human beings being able to sort of justify it tends to come into the factor. So we're definitely in a period of all different factors, but yeah, definitely feeling that as a fraud team. The other challenge we have, which I is always within my Q2 report, is it does come back to system of internal control and some of the governance and the things, the basic things that we need to have in place as an organisation. That's no secret. I you know, I'm an auditor by profession, so as much as I operationally manage the fraud team, a big amount of what I do and I'm thinking about is trying to prevent this happening again. Unfortunately, though, even with really robust control environments, when you get certain individuals arrive into an organisation and they know how to break a system, then actually, you know, we're sort of on the back foot slightly. So yeah.
Councillor Brennan?
So I'm interested in, as usual, tenancy fraud. Right. So as you know, I really think it saves so much money if we can. However, I'm now interested in where somebody is it's decided that somebody is actually practicing tenancy fraud and they're evicted, and they're not practicing tenancy fraud. What's their comeback? Because I'm raising this now because I'm at my wit's end. I have a tenant who was told she wasn't living in her house. She was evicted in her pajamas, and it was just at the time when we'd first started talking about this. And so I sort of said to myself, oh yes, I know we're upping our sort of tightness on tenancy fraud. I'm sure that I'll be able to sort it out. She's been living on the street with her two daughters for 3 years now because she is determined to get back her place because she knows she was evicted in her pajamas. She lived there. What's her comeback? How does she undo this?
Well, I really think that'd be interesting for you to share that case with us. That's not one I've ever heard of or come across, to be honest. 3 years ago, I didn't think we were really that good at getting anybody out of the property. So yeah, I'm quite happy to look at it as a specific case. It's definitely not one that's come across my radar.
Councillor Carlin, do you want to come and speak to the mic?
I can just clarify, if the team finds somebody who's committing tenancy fraud, normally subletting, but other things, but normally it would be subletting, it's not Haringey's staff who evict somebody. They still have to go to court. It has to be proved in court. The person can defend it. There are duty solicitors at court who will help somebody defend a case of possession. After that, there's a whole process. So I appreciate what this person might be saying to you, but it doesn't just happen that a bailiff suddenly arrives at the door without I mean, I don't want to get into casework. I'm just talking
So,
about
Councillor,
generic.
this is a
but
very
just
kind of
to-
specific. So you just
Yeah, I
giving
don't
like
want to.
overarching
No, but that's the
process.
thing. I don't want to get into the
Yeah,
specifics
so
of
if you
this
can
case.
just
But
wrap
what
up
I
on that
just
base.
wanted to
Thank you.
clarify that that it's not the fraud team that evicts somebody. It wouldn't even be the fraud team that went to court to do that. They would be providing the evidence for an eviction based on that. But it's not. I don't want to talk about this specific
Thank you,
case.
Councillor Carl. Thank you. So if this is specific casework, you can raise it with Vanessa and Minesh.
I know that. All I'm saying is there was no court case. I don't understand this
Right.
case. There was no court case.
This is
and
yeah, okay, so
I will explain it
yeah.
because it's most peculiar.
Okay, thank you. All right, if you can send that information to the officers. Just 1 second. I know that you guys are very passionate. Just there's others have to ask questions. So Reyes, if you can ask your question, please. Thank you.
Thanks, Chair. So on page 127, and just before 15.6, we mentioned the weaknesses that have we mentioned the weaknesses in the control environment that has contributed to these cases of alleged fraud or actual fraud. And I guess my question, what assurance or oversight does this committee have on those weaknesses in terms of how those have been remediated? Because I think anything that has led to fraud is material enough for this committee to have oversight of. So where can we see a list of those control weaknesses and who's responsible for remediation and by when?
So we would do a lessons learned piece, I suppose, on the back of all of the fraud investigations. A lot of them don't end up in the criminal space anyway, so they would transition into maybe more of an audit response and a lessons learned. I don't think we really track them through Manesh's report. We track them locally for closure.
I just to add to that, Riaz. So when I do my audit planning for the year, I take account of a whole load of different factors in the organization, one of which is where the fraud risks might be. So you see me doing a number of audits around specific areas, actually because there are some fraud risks that we are trying to manage. And if the control environment isn't robust and therefore the exposure is higher than it ought to be, that will feature in the audit plan to try to improve the control environment in that space. So there is a little bit of a link back. And then there's the annual report that we do, which points to the key areas where either through the internal audit work or through the anti-fraud work, there are specific areas where actually we've got a higher intensity of fraud risk. And again, that feeds back into the audit planning process.
Sure. I guess it would just be easier for this committee if those material weaknesses are sitting in one place, because as you can see, we get a lot of information in these packs. Yeah.
So yes, you know what? As we bring the internal audit plan in March, as part of that, we can bring a sort of an indicative, because it can't be anything more than that, an indicative fraud plan, which identifies the sorts of areas where there have been control failures in the past.
Yeah, because I guess what I'm saying is that control weaknesses are not only identified from internal audit, as we can see. So if we could have a consolidated list of outstanding weaknesses and when they will be remediated, like we do for the internal audit stuff, that would be great.
Thank you. Councillor Jameson.
I wanted to ask about blue badge fraud. Like, because it was my understanding that we've switched to digital badges. So does that reduce the opportunity to commit fraud? But also the numbers are quite small. So sort of how cost effective is it to pursue blue badge fraud?
The digital badges meant that the enforcement side of the activity was a lot more robust. So the guys are out and they've got handheld devices, so they know at that point if a badge is expired, you know, it's been lost or stolen, it's counterfeit, which means that the number of frauds or misuse cases detected within the borough was sort of skyrocketed up to a huge amount. Again, not unique to Haringey, it's like the experience everywhere. The response to it was PCNs being issued, or in some cases the car would be impounded. So this sort of blue badge work, I suppose, went in as to try and put a bit more of a deterrent factor in as part of the fraud strategy, generally trying to reduce the fraud within the borough. The interesting thing we're finding, though, as we talk to other boroughs that may be a bit further ahead on the journey, is that the response doesn't actually reduce the fraud, because this people are still getting away with it. So, and the PCN is a low value. So the work outlined within here is 1 FTE. We've got about 5 FTE equivalents covering all of these areas. So I like it when other small teams get referred to, but we are really, really a small team. So this has been sort of one person working maybe a reasonably large chunk of his time. It is his main focus. We have raised some income for the team through cautions. Parking have been happy to pay towards the prosecution costs, which obviously has to be considered. What we're working on at the moment, though, is more automation into the process rather than it being quite manually driven. So we put in a request to digital colleagues for some help with automating this process. And actually, the estimates of income that could be generated for the caseload that's coming through is about £75,000 a year. So it will wash its own face, and actually that income could be reinvested back into the team to enable us to become a bit more resilient, grow a bit, maybe bring some trainee resources in and help with our succession plan. So lots of different boxes to tick, but yeah, we're really reliant on the automation. We never really envisaged that this one investigator would work for this length of time on the project, but yeah, this really has evolved. The priority between now and March is income generation, because we feel like we've got some successful prosecutions. We have been able to publicise those. There are a few more in the pipeline. So it's sort of the strategy shifting, but we are having to deal with a capacity issue. So it is pick and choose what we're focused on. But the automation will make a real difference and will allow us to sort of cover the costs of what we're doing.
You got subsequent.
And can I also ask about how housing benefit overpayment works? Because I thought that was the Department of Work and Pensions. It's not.
Council administrates all the housing benefits.
Say
Council administrates all the housing benefit payments.
Oh, okay.
Free,
So do we have a vulnerability there?
So, Ramesh.
Thank you. So in terms of the administration of the overpayment, that is carried out by the council's housing benefit team, not the fraud team. In the past, the fraud team would get involved in the investigations of suspected benefit fraud, but as you quite rightly say, that was taken away from Haringey, I think in 2015 time. So since then, we have no authority, we have no powers to carry out any housing benefit investigations. We do get referrals, and when we do, we pass them on to our colleagues in the DWP for them to carry out the investigations.
Yeah, that's and we talk quite openly in the monitoring report. So we do have high levels of historic housing benefit overpayments. A number of reasons of that. A number of that is local authority error. Historically, supported exempt accommodation is another reason for that, and we can kind of talk probably for a good hour or so on those reasons. But it's certainly something that we have been reporting probably for the last 12 months at least now, about the high levels, about what I would call our historic housing benefit overpayments. As more and more people move to universal credit, it's less of a risk, but we are dealing with the current position and kind of over the last couple of years. So we do talk about that quite openly within our monitoring reports, and what that's also leading to is a higher level of bad debts provision that we need to obviously account for, both in the accounts and the monitoring. But yeah, thanks.
Thank you. Councillor Daigiris.
Yeah, I think just before I go to the question I wanted to ask, let me pick up that particular point about the housing benefit overpayments, because it links to what I was saying before about the culture of the organization. 4 years ago, we identified that problem. We had an audit. We did work and monitor until we cleared the backlogs. We said never again because it cost us millions. All right. So here you are. The new officers are Taryn, like yourself now. We expect you now to just change that culture that allowed us afterwards that we fall back into the bad habits of the past on allowing this, this backlogs and losing millions of pounds on fines and not getting the thing from the central government and so on. So that I had to say that. But now one question, a small question, which Carlos Salapotitos probably, I suppose, for my own education, but please don't read any intentions on that one. What exactly is the fraudulent payment of PCNs itself? I'm sure I didn't understand it, but I would like to have an explanation.
So yeah, this is when a PCN's issued and then paid, and within the parking sort of income system, acknowledged as paid. But we then hear from the banks or the bank's fraud teams who would come through to colleagues in finance in the banking team or to my team to basically say that that card it's a fraudulent card, it's stolen card details. So what we're doing is trying to, and we've got a really high incidence of that, but it seems to be linked to telephone payments where there isn't the same sort of security as maybe online payments. So we're doing some analysis of that. So we're doing some analysis of that to try and look at root cause and how we can try and deter it.
The point confuses me. The PCN is issued to a car and a car owner. So if that car owner has paid with a wrong account, then he still, has to pay the fine in any case. That's what I'm, you can't use because you know who it is.
Well, yeah, we don't in all instances have a clear record of an owner. So the PCN is issued to an individual. If the car's not legally registered to anyone, then actually that tracking is more difficult. But yeah, what we're finding is lots of PCNs paid, significant numbers, significant administration to reverse and then try and recollect the money again.
But let me also say that there's, people do duplicate the number plate, right? It happened to me. So those and those kind of, they're just parking somewhere where I will get a PCN, which I haven't actually driven my car. So those are the kind of examples. I think that is one example that Vanessa is referring. Thank you. Is Audit Committee is recommended to note the activity of the team during the quarters 1 and 2 of 2025-2026. Do you agree? Thank you so much. So can I just now move on to the next item, which is item 11, update corporate risk register. Can I invite Mineshjani to present his report?
Thank you, Chair. Just a very quick introduction, if I may. The paper you have in front of you is a corporate risk register that was discussed at COT on the 2nd of October, and the actual risk register is set out from pages 135 to 140 of your papers. Just to save you some eyes, NAS has kindly circulated a wider A3 version so you could see the risks in their entirety. just to think about the profile of the risk, we have six risks in the red quadrant. These are the most significant risks that the authority is dealing with. And then there are a further 7 which are in the amber quadrant. And these are risks that the authority is managing and keeping a close eye on. The table on page 130 highlights the risk profile for your information. And then there is further narrative at paragraph 6.3 and 6.4, just giving a bit of information about each of the risks and what's changed from the last time that I presented this paper to you. You see from the risk table that risk number 1 is the one that is the most significant to us, and that relates to maintaining our financial viability. I suspect this risk will actually change in the future, and it might be called something slightly different. But this is a big challenge for the authority. And you'll see from the risk register that there are a whole host of actions already in place to help us manage and try to control that risk as best as is possible, and a further long list of other things that we've thought about to try to manage that risk better. But even with all of those controls, the exposure remains still very high. Something else that I just perhaps want to highlight to the committee, there are 2 other risks which are in the amber space, and these are risk numbers 6 and 8. And number 6 relates to a serious cyber incident, and number 8 relates to adequate processes for safeguarding vulnerable adults and children, where the risk, if it were to happen, would be catastrophic. But actually, thankfully, the likelihood of that isn't as high as some others. If I pause there and take any questions, I think that'll be fine, Chair.
Thank you, Manish. Questions? Reyes?
Just on the first one regarding the financial viability, a lot of the future actions are based on controlling spend, which is obviously important, and I guess we've spoken at length about it. I guess I would have expected to see the other side of that equation being the income, putting a lot of focus effort on collecting all the income that is due to us, and I kind of see that that's missing from the future actions here. And then just lastly on the cyber one, we have a future target impact of 5, which is catastrophic, and I always use in my consulting years, always challenge my clients on this, because yes, there's almost an inevitability that a cyber incident will happen, but our recovery and our incident response reduces the impact. So I think we should have a bit of a think of how resilient our recovery procedures are, crisis management, emergency responses, to reduce that impact, because if we're happy with the impact of 5, it means that we're actually doing nothing to respond to the incident.
Manish, what Tara, you want? Tara.
You covered my points anyway.
And essentially they both sit with me, so it's probably so in terms of the financial sustainability, I suppose it's a really good point. So it's not documented. My takeaway is it's not explicitly documented. So we have got extensive controls in place. We now have a spend control panel that looks at all non-statutory spend over £1,000. It is extremely resource intensive, meets twice a week. We have got an increased focus effort, and I was going to bring this up probably under the previous item, but it didn't feel right, around making sure that we are recovering the income that is due to us. So that could mean identifying new income streams, absolutely, but we can tell by our collection rates, by our level of debt and our level of write-off, we really need to focus on making sure that we are collecting income that is due to us. So they are both there. They're absolutely part of our financial recovery, response and recovery plan that we're working to. I have to say we put the organisation on emergency arrangement, so we're kind of living and breathing all of this all of the time, trying to do everything that we can. But actually, it's a really good point that we haven't documented explicitly about income. I quite often say income is as important as reducing costs, and I don't want anyone to kind of forget that part. In terms of cyber security, so we have got really clear plans in place for business continuity, which includes protection and recovery. And it might be that we may want to do essentially a session with Audit Committee, you know, almost in a private session with a bit more detail around all of the plans and kind of that we've got in place around that. I would say it's probably one risk on the risk register that's never going to be anything other than red. No matter what you've got in place, you can never completely mitigate those risks. But actually, it might be that we want to do a more detailed briefing with the Audit Committee in private on the detailed plans that we've got in place.
Just a follow-up comment, just on the recovery stuff. I mean, I don't think I'm asking for a detail on your recovery plans, but I guess what the committee would want is some sort of assurance that the recovery plans firstly are in place, that they've tested, and that the testing proves that they would be effective if there's an incident, and that would inform management that the target risk for impact on cybersecurity can actually be lower, because we would effectively reduce the impact of a cyber incident.
And I've actually got some details in front of me because we recently took the business continuity plan to Cabinet as well. So I can absolutely give you that assurance. So really strong focus on safeguarding resident data and IT systems. We have tested disaster recovery plans that we conduct regularly, 2 data centres, multiple backups, and essentially that response support. So that's all clearly documented, but is also tested regularly as well. Thanks.
Councillor Brennan.
Okay, well, very similarly, I'm specifically, so I suppose I am equally interested in actual sort of like a bit more solid information on, like, I hear all the good things that are being done, but nothing sort of concrete. And I was wondering, because I've been hearing for quite a while about the limit on £1,000, whether you have any sort of information on whether that's actually being effective. Is it cutting down how many times people actually put in requests for money, or are you rejecting lots of requests, or is it actually physically making a difference? And just lastly, if we could have evidence of, you know, as has been said, it would be really good to have evidence of how positively what you're doing is affecting things.
Yeah, so as part of our quarterly finance report, we report on all of the actions that are in our finance recovery plan. It's one of the appendices to the finance report, and that includes data on essentially the outcome of the spend control panel. So at the end of Q1, we'll include the Q2 figure with the report to Cabinet. So at the end of Q1, it had avoided 1.1 million of spend that would otherwise have gone through the organisation. So we are absolutely keeping track of that data, and we are reporting it publicly to our update on the finance recovery plan. Thanks.
So,
Thank you. Just wanted to ask about risk 4. I wondered if you could give a bit more context as to what it says here about the health and safety issue and why CLT have asked it to be reviewed and refreshed.
Thank you. Sorry, I was just trying to find the risk. So that risk is classed as a sort of amber risk with a relatively high impact score, simply because I think the way our policy works on risk management is that when people consider the impact, it's the worst case scenario, and worst case scenario could be quite severe. So it's scored as highly as it is. I think the word of caution I would add to that for the committee is that with any risk management process, it is a judgmental activity. It is our view and our judgment as to where we think the risk lies. And in this particular case, that's important to note, because actually we don't think it's very likely. We think it's a moderate level of likelihood. But if it were to happen, it could be quite bad. So that's essentially the profile of the risk.
But in terms of kind of why have they asked it to be reviewed like now? And is the crux of it basically that we need an updated health and safety policy? Is that?
Yes, it is, to some degree. But actually, look, from a health and safety risk point of view, there are instances that have led the health and safety team to consider some specific matters that have arisen in the organization. So there's been a couple of instances where there's been near misses, and they are sort of a good catalyst just to see where we are at and what needs to be done.
So just coming back to the health and safety, Minesh, so the health and safety was also highlighted on the external report, which was quite significant, if you recall. I'm not satisfied it's ragged as an amber, so it's worthwhile going back to the service and checking if that's true representation of the rag rating.
Yep, thank you, Chair. I'll take that back.
Okay, thank you. Is there any further questions? Nope. Okay, so the recommendation, Minesh, have you finished your report? You've done. Okay, so the recommendation for this item is that to note the corporate risk register as at 30 September 2025 attached at Appendix A. Do you agree? Thank you. So shall I now, so now I'll move on to the item 12, which is the organizational arrangement for procurement and the Procurement Act. Can I now invite officers Tyron, Barry Helps to introduce his report. So this report is mainly focuses on the Procurement Arrangement and Procurement Act. So we will have another meeting in relation to systems. Okay, and that should be on your calendar, so we can talk about that in more in depth. Thank you.
Thank you, Chair. And if I just say a couple of words to introduce, and then Barry's going to walk us through the report. So, so we committed, I think we've been committing actually for the last year or so to bring back regular reports to Audit Committee on various updates relating to procurement activity, compliance with the Procurement Act, previous internal audit recommendations, and our plans for improving commissioning, procurement, contract management. I'm really keen that these are all looked at by the Audit Committee collectively rather than individual kind of piecemeal updates on each of those, because I think it's important that you have the holistic view around everything that we are doing, and that's what we've attempted to do in this report. We've also included, and you'll see in the note, a range of what I would refer to as compliance data that we are now monitoring internally through what was the procurement board is now going to be called the commissioning board, because we're keen that we don't just look at procurement. It's really important that we look at commissioning, procurement and contract management. And we just thought it would be helpful to give some assurance to this committee that one, we're looking at it internally, but also that you have some sight of that data. So Barry will talk you through the different elements of the report, and then we'll open for questions. But I suppose we'd be really keen to hear from you around, because I suspect we will want to do regular updates to you, you know, on regular intervals, whether the data that we're sharing with you that we monitor internally is helpful for you as an audit committee as well. So I'm conscious there's quite a lot in the report, but hopefully it gives you that collective view. But I'll get Barry will now walk us through each of the individual sections. Thank you.
Thanks, Tara. Good evening, everybody. So what I'll do is I'll start from the sections from section 6, which is page 144, and talks about the internal audits. So you'll see in the report in Appendix 1, there is a list of audits that were undertaken that had outstanding actions with them. So you'll see from there's over 12 reports, over 70 actions. Most of those have already been or have been implemented. There are still some that are waiting validation from colleagues in audit that we've delivered on those. So just to provide a little bit of assurance there, according to my records at the moment, we've only got 3 outstanding actions, although the report refers to 17 within that. And those outstanding actions are picked up actually either through the ERP program, which is looking at the replacement for SAP and some of our technology that supports the organisation, or through the commissioning modernisation program, which is going to I'll talk about a little bit more within the report. So in terms of, and on top of that, there's also additional audits which are scheduled and they're referenced in the table in 6.4. So a couple of the key challenges that we still face is one, we don't have an e-procurement system and contract management system to the standard that the organisation needs, and particularly where it feeds in to other systems as well that deal with payments or other procurement and contract management related activity. We have introduced a process whereby the services get quarterly spreadsheets which have their contracts on them, and they are to review those and send them back so that we can keep an updated pipeline and understand what the demand is coming through in terms of the contracts. And also it enables us to manage our categories more effectively and our contracts more effectively when we go to market and stuff like that. So some of them are a little bit slow, should we say, in terms of responding to some of those. So I'd like that to sort of be a bit more responsive. And then obviously we've got things around the contract owners and them ensuring that they are adopting good practices, which we've put in place now. We have toolkits, etc., that they can reference, and there are also training courses. And then the other thing is obviously developing and monitoring the KPIs, which we touched upon earlier in the meeting where that was mentioned. So just in terms of the external audit, so today I actually met with KPMG and we were picking up the points that were raised that they were looking into around the value for money, and that will be fed back into the report, which I think will be presented early next year back to this committee. Moving on to the Procurement Act update. So the Procurement Act came in earlier this year, and we had done a lot of preparation in relation to that. So we now have updated contract standing orders that take account of the new Procurement Act, as well as the previous procurement regulations where they apply. We have updated a code of practice to align and take account of both of those scenarios depending upon which regulations they fall under. So this is a much more detailed document in terms of policies, procedures, and how to navigate through the procurement regulations. We also centralised all procurements above £25,000 back in April. And so what that's enabled us to do is enabled us to ensure that we maintain compliance and best practices in the kind of procurement process going forward. All of the procurement officers who are employed through the council are accredited through the central government college. So there are courses which take you through the different modules for the Procurement Act. So all of my officers are certified in that, and we have some that are advanced practitioners as well within that, which means they understand it in a much deeper detail. We rolled out training for probably 3 or 4 months in relation to the new Procurement Act, the contract standing orders. We do drop-in sessions. At one point we were training, or we had training courses, probably 7 a week that officers could access. So that was all available to them. We've met the requirement under the Procurement Act to issue the pipeline of contracts over £2 million. So we had to publish those by mid-May, and we were able to collate that information from the relevant services and issue those pipeline notices in accordance with the Act. And as I said earlier, now we're actually in the habit of quarterly requesting updates in terms of the pipeline for all contracts above £25,000. In terms of the transparency notices under the Procurement Act, there are 17 transparency notices under the Procurement Act, which basically cover the entire life cycle, commercial life cycle, from planning to procurement through to contract management through to contract termination. Currently, all of those are being published manually. We're not alone in that. A lot of the technology providers have not yet caught up with being able to do things in an automated manner through the systems. There are some that are just starting to get to grips with that, but there were some challenges with, I'm going to say, Cabinet Office keep changing the specifications, and they were having to update the systems quite a lot on that. So there are a lot, whilst there are some councils that can automate some of the publishing, most are still manually publishing at the moment. So in terms of the role of strategic procurement, obviously as I mentioned, we've centralised the £25,000 and above, but we actually own much more the process than what we did previously. So for instance, now what we will do is we will ensure that we maintain and manage that contract through to contract signature. We now have provisions within some of our systems that we then retain copies centrally within that as well, as all of the procurement documents as well. So really trying to ensure that we're following best practice and ensuring that we have a library of the contracts all signed in a central repository going forward. So just in terms of, I'll just see what the next one. The other thing that we do is obviously the compliance reports. So from about April this year, we introduced a whole suite of compliance reports, some of which you will see in the pack a bit further down. I think it's under 9.3. There are several reports that are run on a monthly basis or a quarterly basis. I'll just talk you through a couple of those now. So you've got the first one under 9.31 says the number of PIFs received. So PIF is a procurement initiation form. So that is effectively when someone in the organisation has a requirement above £25,000, they send in a request to strategic procurement and we will allocate an officer to work with them. So what that shows you in this particular graph is that since April, we've had 242 requests come into strategic procurement, and the contract values of those is 129 million. We track year-on-year expenditure. So what we've done here is provide an example of one of those reports, which shows the expenditure for the relevant month in 2024 versus the relevant month in 2025. We have year-on-year contract awards. So similarly with the actual number of awards and the value of awards, you can see again comparison between 24 and 25. Contract variations, we've started tracking these now. So it's looking at how frequently contracts are being extended or varied and what the value is around that. That in itself will potentially trigger additional interrogation, shall I say, from strategic procurement. Waivers, where people are looking to waiver the contracts standing orders. We've now centralised all of that, so I have complete visibility. And now if officers want to waiver those, they have to seek permission from me and my team before they can go ahead and action any of the waivers. So alongside that, there's obviously a lot of work that's also going on in terms of the ERP program and trying to ensure that we've got the right technology in place going forward. So moving on, the commissioning modernisation program. So that essentially is been built on top of the procurement modernisation programme, but it's going to broaden the scope now to look at the whole commissioning life cycle, not just focus so much in terms of the procurement side of things. Part of that work stream is to help us deliver 9.2 million of savings over the next 3 years in relation to reviewing the contracts. And the programme is split essentially into 2 work streams, the first of which I lead, and that is around the contract reviews. So we are looking at all contracts to see, and we apply what's called a 4Cs approach. So we effectively look at them to see whether we can simply cancel the contracts. Do we need them? Can we consolidate our contracts and get better value for money? Do we need to change the contracts? Are we overspecifying them? Are we asking for too much in there? Can we change that? Or do we need a completely new contract in terms of the delivery of the services? So that is feeding into trying to deliver the 9.22 million. And on top of that, then we will overlay that with category management and doing a refresh in terms of that, which will align with the commissioning strategies. So where we identify perhaps services need to be delivered in a different way, then we will look at ensuring that we've got the right structure, commercial structure around being able to deliver those services. The second work stream is then focusing on the commissioning practices. So this is kind of going back to trying to ensure that we are following best practice in terms of the commissioning. So that is putting in place a corporate framework which all services will work to. There'll be policies, procedures, new templates, guidance, training. So very similar to what we've done through the procurement programme, but on a bigger scale in relation to commissioning. That will also pick up the work in terms of ensuring that the contract management side of things is being addressed corporately and that officers are following the policies and the procedures and the guidance that are outlined in terms of properly managing the contracts and ensuring that suppliers are delivering on those. On top of that, we link into the wider controls. Tyron's already mentioned the spend control panel. So essentially, that anything over £1,000 is being reviewed through the spend control panel. There is also additional controls relating to the Section 151 officer reviewing anything over £25,000. And we have also a commissioning panel that will review contracts initially over 160,000 because of the volume that we have. And then gradually that will reduce down to 25,000. And that is a much deeper challenge in terms of understanding what the funding is for those, whether it's revenue, capital, grant funded, whether there's actually a statutory need for that. So it takes a much deeper dive into, do we really need those services that we are proposing to commission going forward? And also, is the specification aligned to what we need? We're not asking for a Rolls Royce, when we can get by on a BMW or Vauxhall or Ford. Okay, so I think, and then we've got the commissioning board, which is has just replaced the procurement board, and effectively what they will be doing is they are reviewing all contracts or proposed contracts before they go to market in excess of 500,000. So we introduced some procedures earlier in the year through the CSOs which require cabinet to have sight and sign off on procurements above 500,000 before we go to market. And if you like, the commissioning board is acting as a gateway as well to provide challenge before they go into cabinet. So you can kind of see there's a few things.
Thank you, Barry. So we only have 10 minutes left, so I would like to ask the committee to agree to suspend the standing order 18 in order to conclude this meeting after 10. Yeah, are we agreed? Thanks so much. Thanks, Naz. So questions to Barry and Tyrone. So Councillor Brennan.
Sorry, can you?
Yeah.
Okay, I'm interested in, just I wanted to get clarification on waivers.
Yeah. So a waiver is essentially a request to not follow the contract standing orders, essentially, that relate to the procurement. So for instance, we may have a requirement that needs you for a low value to get 3 quotes, and somebody says, no, we don't want to go out for 3 quotes, we only need 1 because there's only 1 supplier that can deliver that. That's generally the most common one that people request. So, okay.
Yes, you had a question, right?
Yeah, so it's certainly a lot of work being done here, and it's quite different to the previous presentations that we received on procurement, which is good to see. And because of the scale of the program, how do we measure the success of this? Have we defined what the benefits are, and at some point, how do we monitor whether those benefits are being achieved or not? And then secondly, and it's a more detailed, a more specific one, I guess, on the 25,000 spend limit, is there any reason why care and digital services are exempt from the 25K and above limit?
Sorry, could I ask you repeat that last bit again? Yeah,
So
sorry, I didn't quite catch it all.
8.1 on page 146, it says that strategic procurement now manages most of the procurement valued over 25K, except for care and digital services.
Yeah, so the reason that they're exempt is because you have commissioners and a brokerage team, which their job is to put in place care packages with the providers day in and day out. So they have gone through relevant training with this. The service is in the process of redesigning some of their services as well at the time that we were putting this in. So we felt it wasn't appropriate to disrupt that at that particular time. But as part of the commissioning modernisation programme, we will be looking to see whether those other areas will come into strategic procurement. In terms of digital services, theirs is a temporary one for 6 months. And the reason for that being is that they have people that have, well, first of all, they got about 800 contracts, and that's quite a lot to bring into strategic procurement, but they have the in-depth knowledge of those particular contracts and the arrangements that we don't quite have within strategic procurement. So we'd need to look at how that might come in the future.
Tyrone, you want to come in?
Yeah, and just to add, on the digital, I mean, it is the volume of contracts and many that are smaller scale. I mean, I do agree with Barry, it is a temporary measure. There is something about, hopefully what this report has given you is the scale of the work that we need to do. And there is something about recognising that not everything can be done in one go, and particularly with digital, I think we've got the assurance around the robustness of the kind of systems and processes that they've got in place that says to us, actually, it is an area that we want to come to. And it's one of of mine, but equally it feels lower risk than some of the other areas where we know that we need to target. So I think that's another driver. I was just going to come back on the measures of success, but Barry might, do you want to go? Shall I go? I mean, there's two key ones for me. One is Barry's mentioned the, you know, the 9 point, you know, it's the value for money element. You know, we've talked about 9.2 million of savings. Our largest element of spend is on third party contract spend. So, you know, I'm always reluctant to have a target because you only ever aim for a target, don't you? So, you know, our success is we've got to try and go through every contract, particularly in that first work stream around those 4 C's to assure ourselves, particularly given our financial position, that we have actually absolutely scrutinised. I'm a really big fan that actually if you don't commission or you don't know the right services that you need and it's not evidence based, which is why it's really important that we start with the commissioning. The second is, which we've included some extracts of data here, and actually when I was back looking over the report I was thinking about all the other data that we look at in commissioning board, and it's about the compliance. So, you know, it's about, we would expect to see waivers as exceptions. We would expect to see comprehensive and complete contracts registers. You know, we look in commissioning board at, you know, kind of directorate by directorate contracts that are coming close to their maximum value and yet they may have longer to run. It's all of that, what I would call corporate health compliance data, which is also a measure of success. We may not have identified all of them, it is early days, but those are the ones that would spring to mind that I feel that we've got in place at the moment. But Barry, I might have missed something.
Yeah, no, so there are definitely some that we can quantify as we're tracking them through, but actually there's a lot of softer benefits or non-quantifiable benefits that the processes are impacted. You know, so for instance, if we look at the waivers, you'll see there that actually there's quite a high rejection rate in terms of the waivers, and that's because we're putting the scrutiny in there. Now, we're not spending the money, but we're going about it in a more compliant way. And so, you know, it's very difficult, if you like, to put particular figures on that, but that's just an example of.
Yes, yeah.
So I would suggest being more deliberate around the benefits. So for me, some of the things that come up, I mean, yes, the savings, but better insights into the data that we have, which improves our data governance overall, and we can take some of that best practice to other areas in the council. And the other thing must be better contract management, which we know is a recurring theme, and those principles can also be related to other contracts that are income generating, because from the value for money report from KPMG, we've already seen little quick wins that's already generated uplifts in income. So there are some specific benefits that we can keep focused on, and how we relate that to the rest of the council. And then lastly, just the other recommendation, the digital services spend. In my experience in public sector, that is a general area where overspend happens. And if we don't keep an eye on that, and it's mainly because of reliance on the third party. So I would keep an eye on that.
Thank you, As. Councillor Rossetti, I think you had a question.
2 questions, but very, very specific and hopefully very, very quick. So 7.4, there is a mention of the council publishing the pipeline of procurement. So if it's possible to know where is it published, if it's on the website and if there is a link. And the second question is on page 148, and it's the dashboard of the procurement initiation forms. So it is very nice to see this kind of dashboard because you really immediately get the idea. And actually, the question is on the amount of PIF for finance and resources, because I can see that there is something like £72 million for adults, housing and health, and that maybe is more intuitive because it's services delivering outside. Finances and resources is more of a central service. So I was wondering why that amount. Sorry.
Yes.
And let me do the second one, then I'll ask Barry to confirm where the pipeline is published. So finance and resources, it can be a bit deceiving in terms of what services are included. So of course I've got finance, I've got audit, I've got procurement, but I have also got commercial property, corporate landlord model, and I've also got all of capital programme delivery and the new homes programme. So a vast majority of construction contracts fall within mine. So finance and resources probably doesn't necessarily do it justice. So that's where all my big contracts are. They're largely in the kind of construction side of things. Thanks.
And in relation to the publication of the contracts, so it's on Find a Tender service, which they've recently updated, and some people refer to it as the central digital platform. It's Find a Tender service is so Cabinet Office require us to publish all pipelines of contracts above £2 million. That's where we have to publish them. But it's the website's actually Find a Tender. Well, it's Find a Tender service. Okay, within that, so all public sector have to publish their pipeline as well as all the other transparency notices required under the Procurement Act through that. So, okay. So some people refer to it as a central digital platform, but it's Find a Tender service. Okay.
Barry, isn't there like a link that members can go and have a look at it?
Yeah, I can send out the link.
Yeah, that will be helpful. So you can see what other councils are also submitted. So we could kind of data matrix.
Yeah.
Yeah.
First of all, thanks. There is progress, and yes, you demonstrated how complex and demanding is the area, and we've been hammering that thing for years now. So it's good to see the progress, but I don't think that we are touching some of the basic problems still. I think that there are, to start with, my colleague referred to what the waivers are. I think that for half a year or so many waivers is too much. Is there something? This is a part of the problem. Waivers means you don't follow the rules that have been set up for good practice because you got some good result. Therefore, there are too many. To have 1 or 2 a year, I can understand it, but to have 30 and 40 in a year is a problem to start with. There is issues of transparency. I think there is an abuse in general, not only by us, by other authorities, about confidentiality, commercial confidentiality. You can't see, you can't tell, you can't find information about what it is to see whether it is right or wrong. You know, it's not done openly. That is part of the problem. Then after, let's say, leave that just broad area. I think the delegations as well is an issue to me. To say that up to £5 million, it can be determined without even going into cabinet or something, you know, or some kind of. The figures are going up and down, up and down, up and down all the time, but they're huge as well. That means less transparency, less scrutiny, and all that kind of thing. So there are some problems as well that we have to look at as well there, in addition to having the information complying with the letter of the legislation, etc. Now, after we have a contract, it's not only monitoring the whole thing, is the problem, the real issue. We all know that contractors on various fields do about variations and about additions. Also, why do we have so many contractors going bankrupt? You know, when after we used to have very good rules about financial viability before you let a contract, you know, to somebody. All right, why so many we got, for example, building contractors all the time? One after the other. The cost is huge. So I won't, but I think I don't want to discourage what we're doing at the moment. I think it's very good and it's very long overdue. So we're so grateful for that. But also, just to add, the 9.2 million, I think to me is part of the culture I was talking about. What on earth does it mean? That we made an estimate we will save 9.2 million on the contracts. Does that mean what? That we will, it's absolutely meaningless.